Yeah, sure. Whenever ready.
So I'll start the webinar now. So
Sure.
maybe we'll have to wait a few seconds till the attendees join.
Sure.
Okay, we are live. We'll wait for the attendees.
Okay, great. Good afternoon, everyone. My name is Sherry Shi, the co-founder of VFF Events. It is my great pleasure today, and on behalf of my co-founder, Mashir, and the VFF team, to warmly welcome you all to GBA WealthConnect Forum. Today's forum will focus on the discussion on the wealth management in the Greater Bay Area. The forum will look into the chance of digital wealth management, generational wealth transfers, and private wealth sustainability in GBA area. A great thanks to GBA team of Invest Hong Kong, who provides us tremendous support to make this event happen today. And I'm grateful we have invited our distinguished speakers who join us, and they're generous to share their experience and knowledge. Thank our community partners who provide us a great support through their own community. And I'd like to give a warm welcome to our audiences from GBA and beyond who join us at this event. And I hope you all enjoy and be inspired from today's session. Without further ado, let me invite David Wong, Head of Greater Bay Area Business Development, Invest Hong Kong, to deliver a keynote for today's forum. David,
thank you, Sherry, and always delighted to work again with VFF, and thank you again for inviting us to be part of this very interesting forum. Of course, the Greater Bay Area is always been, at least in the very recent 2 or 3 years, it really become the talk of the town. So I have a very brief introduction on the Greater Bay Area, and also what the business opportunity, especially on the financial service sector. My PowerPoint, I'm happy to share my PowerPoint with all the audience. If you're interested, let us know. My presentation in the next 10-15 minutes is basically walk through the general introduction of GBA, and also most importantly is on the business opportunity, especially in the financial service sector and beyond Wealth Management Connect, and also on other aspects of financial services that the increasing development of GBA empowered a better role for Hong Kong. So, of course, the GBA needs no introduction. The 86 million people and the 1.9 trillion GDP actually put the whole region, compared with other countries, ranked maybe number 8, number 9 in the world, which is really a tremendous economic size that we witness growing very rapidly, especially in the past 3 years. We make this chart for illustration purposes, of course, to compare the number of stores of some well-known international brand of various market size, and also a different industry. The point is we want to make is that the GBA region is actually have very strong consumer power, similar to that of San Francisco and Tokyo, which is in itself a very significant big deal. Of course, briefly introduced for those who are not too familiar with the region, there are 4 main cities in the GBA. Hong Kong being the most international city, the financial center, shipping and trading center. Macau is Hong Kong is, of course, the international tourism and leisure center. North of us, It's a very important Shenzhen and a technology and innovation and technology hub, and also Guangzhou city, the capital, and also a trading port in the province. And there are also in other smaller surrounding cities around the Pearl River Delta, it's Foshan, Zhongshan, Dongguan, and Zhuhai. They are all advanced manufacturing bases. So all of these the different cities in the GBA actually each have their own specialty and their own industry focuses in order to maximize the synergy of the entire region. Of course, all of this possible by the excellent world-class infrastructure, the high-speed rail, and the Hong Kong-Zhuhai-Macau Bridge. I'm sure all of you are quite familiar with. So, what is the role of Hong Kong? Why Hong Kong? Why we expand through Hong Kong? What Hong Kong has to offer? The development of the GBA, of course, is set by the publication of the outline development plan 3 years ago. It's a high-level plan developed by President Xi Jinping himself, and also led by a Vice Premier of the State Council, Mr. Han Zheng. It is a leading group overseeing the development of the entire GBA. The role of Hong Kong, as I just mentioned, is why Hong Kong. This chart has been true at least since I think reform and opening up 40 years ago. There, a majority of FDI into mainland China go through Hong Kong, and more recently, a majority of outflow investment from mainland China into the Belt and Road region and to the rest of the world also go through Hong Kong. So a lot of money go through Hong Kong, and increasingly so. That is the fundamental and the basic reason why Hong Kong is being a international financial center and offshore renminbi hub. In a more overall strategic level, the positioning of Hong Kong, I think there are several different ways. One, of course, from Hong Kong, because of the excellent world-class infrastructure, companies can reach their consumer very easily. And B2B partnership, because of Hong Kong is an international business hub, overseas company and also mainland companies can find partners here in Hong Kong to do joint ventures and do all sorts of cooperations. And don't forget, of course, because of the increasingly development of the GBA in recent years, a lot of homegrown GBA companies are wanting to go global. And they use Hong Kong for Hong Kong's business and professional services, such as fundraising, of course, but also on the legal, they're managing the foreign exchange, signing contracts, insurance, and everything. So, last but not least, of course, Hong Kong also have a very strong connection with the Southeast Asian region. That is something we have a strong historical and cultural and social ties. In the 14th five-year plan, cover the period 2021 to 25, Hong Kong has 8 important roles for the whole of China. One, of course, is the traditional 4 sectors: financial services, transportation, trade, and legal and dispute resolution. These 4 traditional sectors are continue to be the focus of Hong Kong. And there are also 4 emerging priorities for Hong Kong: aviation hub, innovation and technology, a regional intellectual property trading center, and also a cultural and exchange center for East and West. So Hong Kong, as you can see, as I mentioned very briefly, it's really a two-way platform linking mainland companies with the world and also with the world through Hong Kong into China, mainland China, and GBA. So allow me to focus more on the financial service industry, and since the topic is financial service industry. So the role of Hong Kong in financial services, I think there are 4 major areas. One, as I mentioned, is a very easy to access the GBA investment opportunities through the various Connect scheme, including the Wealth Management Connect scheme, and also provide a capital for startup in the GBA and in Hong Kong. That is increasingly make the whole region an innovation powerhouse. And of course, the increased connectivity for the financial markets between Hong Kong and mainland China. And last but not least, there's a green financial hub we are currently developing. Hong Kong Edge, I don't think I have to go through in detail. Of course, Hong Kong is a very excellent wealth management hub. A lot of high net worth individuals, a lot of Connect schemes, also a offshore renminbi hub, #1 in the world, and also a developing into a green finance hub, top IPU venue, and of course a very strong insurance market as well. For the opportunities for financial services in Hong Kong, allow me to elaborate a little bit further, is that because of the interaction between Hong Kong, Shenzhen, and the rest of Guangdong province, there are several developments for Hong Kong that really stand out for all of us. Of course, all the large population, the trade, the capital flow create opportunities for cross-border payment, banking, and wealth management needs. That's all of these strengthen Hong Kong role as an offshore renminbi hub. And also there is more and more, as you can witness, more and more financial market integration between Hong Kong and the mainland GBA cities. This is figures we have from various sources. Because of the continued development of the GBA, there are more and more high net worth, ultra high net worth individuals in the region. Also, the overall population, the general, the consumer power, and the general wealth, they also increase. So all of this create a lot of opportunity today and for the years to come, which is all of these are the underlying reason why the GBA is such an exciting business opportunity, especially for the wealth management sector. This is the brief recap of the various Connect schemes that we have, especially for the linking Hong Kong and the rest of GBA. Back in the the old days, it's actually not long ago, 10 years or so, we have a lot of QFII schemes linking Hong Kong and the mainland financial services system, and then the speed actually picked up in recent years, and the Stock Connect scheme between Shanghai and Hong Kong and Shenzhen and Hong Kong recently, and of course also mutual recognition of funds that allow more and more integration of the wealth management industry in Hong Kong and the rest of mainland China. And lately, two important scheme. One is the Bond Connect scheme that is in the pilot. Of course, the Wealth Management Connect launched late last year was also a pilot scheme. I think it's safe to say that in the months and years to come, all the scope of these schemes will be broadened and increase as the retail investors or institutional investors are getting more and more used to and more familiar with these new policies. A new focus, sort of a more new focus of the Hong Kong SAR government is to develop Hong Kong into a green finance hub. Of course, as all of you are aware, the central government pledged to go, the entire country to go carbon neutral by year 2060. The Hong Kong SAR government pledged to go carbon neutral by 2050. All of this create a lot of new business opportunity, especially in the net zero scheme and also related green finance. So there are in the GBA, there are a lot of demand for carbon trading, and because of the manufacturing base in the region, and also a huge demand for more green projects and their financing. because of the goals of reaching carbon zero. Hong Kong, our traditional strength, of course, we don't have much industry here, but we have a very robust financial service market. And that's why we have one of the largest green bond market. We also have a very strong presence of large global financial institution here, looking for green investment opportunities, and also related certification work. So I hope in the past few slides I give you a taste of what the business financial service sector in Hong Kong are the opportunities. Where are they? Hope I can help you see the vast potential building from of course already a very high ground, but also continue to have a very large potential in developing into a further and even more international and more stronger and larger financial center. So before I continue longer, allow me to briefly also introduce Invest Hong Kong. Invest Hong Kong is a government department of the HKSAR. Our job is to attract and retain foreign direct investment from mainland China and also from the rest of the world. I'm from the GBA business development team. My job is to attract international companies to set up in the GBA through Hong Kong. So we we share a lot of information. We manage a website to educate the overseas investors on the tremendous opportunity of different cities in the GBA and also in different sectors. So we have an investment landscape, a page on the investment landscape of each cities, but also on the supporting policies of each cities of different sectors. So we try to divide it by cities and by industry. We hope to give everyone a taste of what policies are there to support companies from different industries and for them to help them choose which city they should go. We also regularly publish articles on LinkedIn to share the latest development on the Greater Bay Area. So just really briefly go through give an overview of the financial services opportunity in Hong Kong. I understand that the other experts in the other forums and segments will talk about Wealth Management Connect and private banking in family offices in more detail. So I look forward to that, and I hope you have a very fruitful and knowledgeable and meaningful forum in the rest of the afternoon. Thank you very much.
Hello.
Yeah.
Yeah. So are we all here?
Candice.
Candice having some joined and then he dropped. Yeah.
Okay.
So let us know when you can be on time.
I'll be starting the webinar.
You guys can hear me okay?
Yeah.
Yes, we can.
Okay. Perfect. Thank you. So sorry about that. I couldn't log in for a second.
Yeah, Ken, I think your connection is a bit unstable.
Okay. Better now or no?
Seems yes now, but sometimes it got a bit.
Patchy.
okay.
Yes.
Let's see. It's okay now. If it's patchy again, I'll let you know. Yeah.
Sure, no problem. You know.
This is Hong Kong. We all face issues with Wi-Fi from time to time. So yeah.
If anything goes wrong, I'll do like sign language or something, you know.
So the way I'll do is when Asim introduces me, I'll just start off. I will then call out each of your names one by one, and you could then introduce yourselves. Take your time, half a minute, 1 minute about yourselves and your firms, and then we can
So we'll be
go on
going
from
live.
there with question answers. Yeah.
Yeah, guys.
So we
10
are about to
seconds.
start. Yeah. Going live in 5 seconds.
All right. Good afternoon. Welcome to GBA WealthConnect Forum 2022, Opportunities for Wealth Managers through GBA WealthConnect panel. We are so excited that all of you could join us today for this wonderful afternoon. And joining us, we have Mushir Ahmed, the founder and managing director of FinStep Asia, and our wonderful speakers. We are so excited to listen in on the insights and the valuable contribution that they have for us today. So Mushir, I'll hand over the session to you, and please let us hear.
Thank you so much, Asim, and thank you to David, who has made the keynote prior to this. Very exciting things happening in the GBA, which we are seeing grow in tremendous form. Today with me is what I call a rockstar panel. We have 3 tremendous individuals across 3 large organizations who are having a big impact in the GBA, and we'll listen to them about how wealth management is changing in GBA through the WealthConnect process. I will start off with asking my guests to introduce themselves. Start off with Irene Lee. Irene, could you please introduce yourself briefly?
Hi, everyone, and good afternoon. Welcome to the panel. And I'm Irene Lee, who is a compliance officer in the UBS AG. And I'm also wearing another hat of the member board of directors in the FinTech Association of Hong Kong. So welcome to the panel, and I would like to share more in the next section. Thank you.
Thank you, Irene. Ken?
Hi all, good afternoon. My name is Ken Shi. I head up a wealth management division here at Saxo Markets in Hong Kong, overlooking both Hong Kong and also part of Greater China as well. So Saxo is a fintech firm focused very much on investing, and so I'm sure we'll share more in the panel.
Thanks, Ken. And Bosco, please.
Thank you. So hi, everyone. This is Bosco from Alibaba Cloud. I'm in charge of the local business development team of the financial sector. So I'm mainly leading the team in serving the banking and insurance sector. So yeah, happy to be here today to share some more insight on the overall GBA WealthConnect strategy. Thank you.
Thank you all. And as you mentioned, I'm the founder of FinStep Asia and co-founder of the VFF events. I have a background in financial services for the last 2 years and currently an external consultant to the Bank of International Settlements and an advisor to the Stellar Development Foundation. Now, diving right in, we all know how, as I mentioned, the GBA is becoming a major Bay Area globally, and we're looking at the tremendous opportunity presence. But starting off with one of the key themes that we're seeing rise in the region is what's known as the WealthConnect scheme, right? So I would like to start off by asking Irene, from a regulatory and policy perspective, could you introduce to the audience what the WealthConnect scheme is?
Yeah, sure. I believe Wealth Management Connect is not something that is unfamiliar from the audience perspective, because it's been launched for around a year. It was launched in last year, September. And actually, this is a mutual access, the first actual really real effort mutual access between the capital markets of Hong Kong, Macau, and the mainland cities to access both the wealth management products selling and also for some of the investment opportunities. And there are, of course, like the other connects, we have some regulatory requirements and quotas for it. So in the initial launch, basically for individuals, there's only 1 million RMB dollars for individuals. And there are also some product limitations for the initial launch. So initially, they look at some plain vanilla products like equities, authorize the funds, and also for eligible banks to join in and partners the banks in China as well. And also, when you look at the statistics last month of the regulators, basically we have 23 eligible banks to attend the southbound scheme, and also have 19 eligible banks joining the northbound scheme as well. And also within the scheme, the individual customers can actually open a designated remittance account and investment accounts with a closed loop transmissions, and also the closed loop kind of monitoring, so that they can actually sell and buy the investments through the channels. So I think along these few months or all these years, basically this is quite a good experience for those partner banks and Hong Kong banks. So by looking at the list, basically those banks have a very large and strong retail population, so that for those individuals who hasn't been accessed to any of the capital markets within the both region, they can basically buy, purchase those products from a cross-border perspective. So these are some of the basic facts. And basically, I think along these months, there are a lot of different momentums and developments, particularly for the cross-border investment opportunities within the GBA, and also some RegTech, FinTech, and digitalizations within all these schemes as well. So this is a very good start. And both of the partner banks and the Hong Kong banks have a lot of know-how now. So if the scheme is going to expand to a more wider scope, like private bank, private wealth management, and then many of our banks is already ready to go now. So these are some of the basic facts we share.
I think maybe to add on a little bit as well, obviously, I think the business potential of this is huge, right? So I think with the scheme being open mainly to affluent or above investors, so minimum, let's say for a lot of southbound investors is 1.3 million Hong Kong dollars or above. I think this additionally captures for us, particularly for southbound type institutions, another potential 2 to 4 million customers. And just looking at some of the early data, right? So just looking at high net worth clients alone, we're looking at almost like 1.3 million high net worth clients potential, about representing about $6.5 trillion of high net worth wealth, which resulting in about like maybe $500 to $700 million in terms of actual fees for a lot of the financial institutions. That's up for grabs. So this is actually, I think, a very significant move. Obviously, early on right now, due to the borders being closed, I think the overall adoption rate is still relatively low. I think earlier numbers were saying that the utilization rate was less than 0.3%. But having said that, I think this is definitely a step in the right direction.
Thank you, Ken. Bosco, I'm going to bring you in here, and we'll also bring Irene and Ken into this. From Alibaba Cloud's perspective, how are you, what's your firm's main focus in the GBA?
Okay, for GBA, well, so obviously Alibaba Cloud is a cloud technology company. So we mainly assist the enterprise, along their digitalization journey. So especially for GBA, I think, it's more about the interaction between both regions. So we are aiming focusing how to ensure the balancing between the needs of the regulatory compliance and also the customer experience. So we usually say face clients, going to China or from China going to the international. So it is a very interesting experience for us. So knowing the difference between two parties. And also one more interesting thing is because ourselves we do have Ant Group as well. So we ourselves is also one of the users of one of the participants in the overall scheme. So it's interesting that we are not just only providing solution to the community, but also we ourselves is one of the users of those solutions. So along the conversation and interaction with those finance enterprise, it is interesting in joining in such kind of innovation solution and breaking through different kind of challenge over the journey. So it is a very wonderful experience.
Thanks, Bosco. Irene, from a UBS perspective, or generally speaking, private banks perspective, what's the engagement you're seeing in the GBA?
Yeah, I think we talk about quite a lot within the industry, like with the PWMA, what's basically the role of the private wealth practitioners for the wealth management scheme, because this is quite a retail focus at the start. But I think this is a right start, because actually we can observe and part of the role in the lobbying and also in the conversation with the industry association and also with the regulator, how wealth management practitioners can be involved in the second stage. So basically a lot of intention, conversation, dialogues are happening, how to expand it to cover maybe the brokerage firms and also with a wider wealth management products books and also for advisory services for the other banks as well. So back to the questions, what are our preparation? Basically, we are not just looking at the scheme itself, we are also looking at the wider GBA opportunities between private wealth management sectors and the GBA area. So we would not only eye on the product shelf in cross-selling opportunities, we're also looking at a wider, more strategic opportunities like the partnership with the domestic association and the financial institution, plus some of the digital RegTech and FinTech applications that we can actually extract from it. So as Ken rightly mentioned, with the COVID pandemic, we are a bit of slowing down for opening accounts, but actually we are exploring what are the other digital tools that can help to aid the remote onboarding and also for the robo-advisors. And these are the really good elements to add on the current Connect scheme as well. So these are the things that we can explore beyond the Wealth Management Connect scheme, which actually quite beneficial to the high net worth populations.
Thanks, Irene. Ken, coming now to you, how do you see Saxo Bank engaging in the GBA?
I think it's kind of twofold at this point, right? So obviously back in March, we saw information beyond the 23 banks that are currently approved. The next wave, at least rumored to be, will be brokers as well, right? Obviously, there's no clarity on this at this point, but I imagine a lot of the chatter that we hear is obviously when the borders reopen, maybe towards the end of the year, we'll probably get more clarity in regards to this direction. But I could imagine for Saxo, given part of our business is a brokerage business, that when this does open up, that potentially we would also consider about submitting an application, right? Obviously, this is still early days, but on our end as well, what Irene alluded to as well is with how many people there are in terms of potential in the GBA, I think it'd actually be very, very hard to service these people, obviously, from a human standpoint. So digital solutions will definitely be very much needed. On Saxo's end, actually, we're looking to launch a digital wealth management service towards the end of this year. So essentially, it'll be quite similar, but more of an institutional grade version of a lot of the robo-advisors that you see currently in the market, servicing much more like retail customers. And at least what we've seen since it's already launched in Europe. So we're already managing over like 1.3 billion just with the digital wealth manager alone. And we're looking to launch this in different regions, including Hong Kong and hopefully eventually in Greater China as well in the GBA. But furthermore, the second prong of that will actually be servicing institutional clients. On our end as well, we also do a lot of white label service, and we also have a pretty wide range technology stack. So I can imagine for a lot of financial institutions who are looking to capture the opportunity within the GBA, that they will need to further digitize or maybe offer digital wealth offerings. And that's something that we can also help them with.
Sorry, I'm on mute. 2.5 years and still getting used to it. I'm just gonna, continue building from there. Ken, you guys are looking to come in. There is a lot of happening, but why is it, important to have an integrated scheme such as WealthConnect for the GBA? What do you feel is the importance of building together something that integrates the three regions?
Well, I think the most important thing from my perspective, I was thinking from a business perspective, is in Hong Kong, we have a couple of hurdles. One is everyone is way overbanked here, right? So I think when you look at the statistics, right, in terms of bank accounts per population, I think it's like 2 bank accounts per person. Given the fact that there's only 8 million of us in Hong Kong, for most of the banking or FI businesses looking to expand, there is definitely a big market cap. So opening up the GBA, I think, will definitely be a step in the right direction. And I think integrating in terms of the opportunities further outside of Hong Kong, I think it really, really makes sense for a lot of the players here, because there's a lot of new players entering the market here in Hong Kong. And truth be told, sometimes I feel like the pie isn't big enough for all of us. So this really makes sense from that front.
Yeah, I think that's true. So with a greater market, so from our perspective, so it is more chance for innovation. So while we engage with those institutions, so when they're facing a bigger market and also crossing the border, so from business side, they may not consider much about the technology perspective challenge, but from our side, we can really jump into the maybe the planning process to discuss with the users to see how they really want to achieve or how they want to shape the customer experience between two sides, because especially when the culture or the way they're using banking service is quite different actually from two regions. So it's interesting for us as a technology partner to take in part, take place in the overall process and achieve the innovation together with the enterprise. So this is really helpful and handy for the overall achieving the result we're expecting for the overall scheme.
Yeah, echoed with Bosco and Ken, right? So this is a very large market capitalization within the GBA. And I think it is not just how we gain access and know how to do business within the 9 cities in the mainland China, but also it's how to aid the internalization of the China capital as well. So when we talked about this opportunity within the industry with our clients, some of them even told us that they have a family business offices in China. They have close ties with the GBA, but basically the world is a bit of unstructured and they are willing to know how to do cross-border investment opportunities, and also a bit of struggle how it will happen within the GBA. And then also asked about, is there some special schemes or regulatory regime that help them to do business easier with the GBA? So that is something that we see that there could be some kind of bespoke, tailor-made scheme within the GBA where Hong Kong playing a key role into it. And also we can actually introduce the experience from what the global banks are having and then bring the China wealth to the international or overseas. So I think last year we can see PBOC have the CNY pilots to try on for the domestic markets. I think with all these connect scheme, those channels and those digital currencies can actually gain more access and also gain more technical applications for those cross-border payments. And WM Connect would be a very good pilot before we actually boil the full ocean.
Thanks, Irene. As we head forward, it is important that the integrated scheme is there. We have one of the highest densities of high net worth individuals of anywhere in the world when it comes to the GBA, and also when it comes to mainland China and the greater China as a whole. How are wealth managers looking to leverage WealthConnect to serve their customers? Irene, maybe we can start with you, continuing on from where you were. How do you see wealth managers leveraging WealthConnect to serve their customers?
Yeah, so in the past, even we do not have the Connect scheme, we have wealth managers sitting in Hong Kong, in the other booking centers, and also cross servicing their clients in different domicile. And they may need to comply with a lot of data privacy issues, comply with a lot of cross-border jurisdiction and implications. So for them, this is a bit of quite a complex issues for them if they want to do global business. So if we have a GBA, that means they would do intense investment discussions and allocations, as allocation for their clients, which is have close ties within the regime. So it would be easier for them and more focused on their own product shelf and something that we are very familiar. And from a regulatory point of view, wearing as my compliance officer hat, it is also easier for us to do some kind of regulatory monitoring, surveillance, and also for viewing the transactions as well, so that we can actually keeping all this dialogue in a very safe and controlled manner. So from a wealth manager point of view, basically this is something that we are in advantage, benefit for the customers instead of they're really to look at something that they are unfamiliar. So for them, this is a more opportunities for them as well. So, but I believe Ken would have more insights because he has a lot of experience in running the wealth managers team and as well. So maybe Ken, you can give us some insights. on this.
Oh, I'm sure you already gave us a lot of insights. Having
On
said
the
that,
compliance officer's lens, so normally I would just cautious and make them worried the risks that they have.
So I'll put on my business lens. No, I think maybe just a few things, right? So a few things that we see quite obviously in the market, I would say, is three things. One is what we're seeing is an increase in hiring. So earlier we heard like for Citi, right? So they're looking to hire an additional 1,000 relationship managers on the ground here in Hong Kong, mainland China, into 2025. On the second end, which Irene kind of alluded to earlier in our conversation, was the partnerships created, right? So earlier we heard from DBS, who has the partnership with Shenzhen Commercial Rural Bank. And I think this week we had Citi with China Guangfa Bank as well. So again, strengthening their local presence and also their network. But then when you do the math, I think at the end of the day, you still need to digitize because, I mean, at 800 million 80 million in terms of population, but when we think about eligible investors, even though there is a cap right now, I think 300,000 accounts can be open, but eligible investors, we're probably looking at somewhere 2 to 4 million. So however much you hire in terms of relationship managers technically won't solve this problem. So I can imagine that for many banks right now, it's just so important for them to further digitize the experience, both from, let's say, an improved experience, but also from a scalability angle. And so I think there's actually quite a lot of room for improvement in this regard.
Yeah, perhaps I can share one of the conversations that I had with my wealth managers in the bank and in the association. They said, oh, digitalization. So everyone talks about it, but doesn't mean that every customers would like it. So interestingly, for the super high net worth customers, they embrace both hybrid models. So we are talking about like the wealth management in the future. They are not fully digitalization. They want something that having more human touch. So in the future, they're looking for someone that is designated for them to serve their wealth succession and so on. They also want to experience some of the branch environment as well. So what I see in the GBA, some of the banks would have some digital assets, 5G banks, and also some of the other interesting fintech applications. So they would also see how they can experience and benefit to the branch operations. Plus, they also want to have some kind of digitalization in some of the areas. So for them, they love hybrid, they love trendy, they want to be ahead of the wave, but they just don't want to stick with one model. So perhaps this is something that we can think of, a tailor-made high net worth customers experience in the metaverse in GBA. So they are looking for something new, interesting, disruptive, and this may be a trend for the wealth managers, how to get know-how, how to develop their skills when serving their customers in the GBA. Then we would be outstanding across other regimes.
I like how you threw metaverse in there. I just wanted to touch on the next point. I think actually Irene is dead on. Just because I think when you look at the data in terms of people that are right now in terms of southbound opportunity for many of the banks here in Hong Kong, you look at the mainland investors, the vast majority of them actually don't have much experience investing in assets outside of the mainland. I think over 70% in a recent survey was said that. So clearly at this point, although earlier, I think a lot of people went straight self-serve type of digital service. I think this next round, particularly with these affluent or above customers, they will expect more than that. So I think both from a logic angle that maybe they do need some human handholding, because what we know from many of us who, me, myself, Bosco, and I'm sure Irene and Mashur, working a pure digital offering, sometimes you just can't complete that final mile. So we definitely need the human touch to be able to kind of translate what the machine or what the technology is offering to the clients. But furthermore, it's also thinking about the behavioral kind of element of the actual investors. If they're not familiar with it, then having someone to hold their hand is really going to make sense. So I think, yeah, Irene is dead on. Yeah, hybrid probably is, like figuring out how to do the hybrid, I think will definitely be a challenging task.
We'll need a lot of hand-holding in the metaverse for sure, right? As the avatars are created and a lot of other things. But that's actually going to be one of the key things we will see coming out is interesting technology models in the region. You've already seen some of the government officials and municipalities looking at metaverse, and you've had that and South Korea is already way ahead in that. But Bosco, your views on this? How are your clients looking to leverage technology potentially for serving their customers in the GBA?
Yeah, I share with Irene point. So especially for the high wealth profile customers, so we really need to tailor-made our the experience or the overall journey in doing the business with them. So we also embrace the hybrid mode. I think every technology vendor does. So we have to take care of every customers. So maybe they are a bit old-fashioned. They prefer a phone call. Some may be more advanced. We prefer video call, or maybe we like metaverse. We're looking for avatar. So I would suggest the bank be open, not just the bank, but also the brokers, the insurance company, be open to explore the possibilities with the client. So even for us, we do serve the client from Ant Bank or Alipay. We keep doing innovation in terms of the customer service side. So during the COVID, people get used to do the remote account opening, doing the eKYC, but more people are looking for more like the remote surfacing. So maybe we need not going to the branch anymore. We're just using the video service to complete the task. So from the technology perspective, our role is to help you provide the technology as well as help you to comply with the regulatory requirements to ensure the risk is under control, to ensure the service is secure enough. So these of experience is essential for both bank and also the customer. So let them to embrace the technology and don't need to fear them. So I do encourage the enterprise, not just the IT department, but also the wealth managers maybe just welcome to discuss with your IT vendors to share your idea, because I think the ideas from the wealth manager themselves is very key, because they are the one at the front line talking with the client. They know how the client practice is. So share with us their idea so we can working together to find some innovative solution and tailor-made for your high net worth client.
Sure, thanks. Irene, coming back to you, what are the products that you're seeing being expected by the customers? And what kind of products are they looking for from the WealthConnect scheme in particular?
Yeah, so for those maybe individuals, customers, when they look at the shelf from the Wealth Management Connect scheme, they would see this is something basic, because the risk band is from low to medium. So somehow they are quite confident or very safe to play around all these investment shelf. But at the back of the scene, I think they're also thinking of what is the next stage. So for the high net worth customers, basically they like something more speculative, something more tailor-made, or something they want some kind of actually mandate. Or is there any advisory kind of elements that we can actively be playing a role? Or actually, is there any discretionary kind of portfolio that can actually add into it? So they're already asking, oh, can I do this, put this in the portfolio and through the connect and then do something more interesting? So I think from a product shelf point of view, this is a few steps approach. So now we are focusing on a more confident shelf, and then go to a stage 2. Can we add on more kind of unauthorized product, private kind of placement investment products, or something more bespoke? And then at the first stage, we can have the full scope of investment shelf. This will be something that I think the industry is expanding and talking to the regulators. So we will see how it will happen, and I think maybe Ken or Bosco can share what they see from the external world and from the regulatory compliance lens. We do see this would be a progression or evolving trend that is coming up soon.
I think maybe it's not, well, I mean, obviously it's a bit vanilla, right? So definitely not spicy enough for many of our investors here in Hong Kong or mainland China. But having said that, I mean, when you look at the Hong Kong MA, recently came out with a study that said that, in terms of eligible funds right now in the market, we're still looking at maybe 100, 200 eligible funds that are SFC authorized that we can offer for southbound investors. So there is actually a pretty decent amount of choice. I mean, yes, maybe a bit vanilla, but having said that, I think also thinking about the current investment environment as well. I mean, clearly, markets have been trending down since I would say like middle of November of last year. And considering that there's been quite a lot of sell-off in the market, this actually may not be a bad thing for a lot of vanilla products, because truth be told, if you're at a private bank right now and you're thinking about what products actually resonate with your clients, right now there are very few, right? They're basically income type products or capital protected type products, and maybe some like private equity or some sort of like private assets, or maybe clients might be invested in something like, I would say, like insurance or whatnot. So maybe even in this investment environment, this may actually play into and become, I would say, even favorable for actually the structure of the WealthConnect right now, just because probably people aren't very risk on right now.
Yeah, I think today's basically I'm quite busy in looking some of the regulation. One of the pieces from the HKMA and SFC on digital assets that actually inspired me how long or how soon we will have digital assets involved in the Connect as well. So not sure from a Ken, Bosco, what is the investment point of view, if how soon we have in the Connect.
Bosco, any thoughts?
Yeah, any thoughts? Digital assets, I think what the regulators today are looking at, digital assets not solely defined as Bitcoin's digital currency. They also look at the traditional investment product where they have underlyings linked to the indexes or underlying to the linked to the virtual assets as well. So it could be broadened to the conventional traditional assets where it will be like ETF kind of thing, or we have ETN that link to the virtual assets. So it could be something that we are already trading for the Connect. So not sure if that's something that we are also can expand for the product suites. Because as you see with the market environment here, people tend to look for something more short-term or medium-term or long-term. So virtual asset is definitely for something that they will eye on for the asset allocation.
Bosco, how are you seeing your clients? Go on, please. Yeah.
Yeah, I think so. So for the coins market, so on one hand, we are waiting the regulation to become more transparent on the overall planning, but at the same time, we are also helping some banks or financial institutions to build their own, blockchain network to help them to easily maybe their own NFT or their own market. So I would see this as trend maybe going to the our future, the metaverse world. So I think it's a good timing, especially when the overall macro environment is getting, I would say, calmed down a bit now. So it is a good timing for those institutions to plan for themselves how they move on in the transformation journey. So like we said, on one hand, it's on the customer experience, but also on product-wise, how we can get ourselves prepared to embrace those kind of technology, because for the institution itself, they have to have the infrastructure ready as well in order to be in connect to the external market or the exchange. So this is something we should get prepared for and also get ready to the update of the regulator. So I always get prepared and explain the new stuff.
I mean, clearly this is going to be tricky, but I think I was reading some earlier report from like Oliver Wyman, and they were saying like how for a lot of the southbound investors that I think almost close to 1/3 of the investors said that they had interest in setting up a digital wallet. So that shows to me it's quite clear what the demand is, even though clearly from a regulation standpoint, this is a let's just say not particularly clear just yet. But clearly, I think for a lot of professional investors that may be entering this market, the fact that it's a little bit more at least outlined here in Hong Kong, I could imagine that this could be something that could be quite attractive. Although having said that, juggling both onshore and offshore demand for this, I think will definitely be a tricky situation.
Yeah, I think with Share, maybe this is one of the potential projects that we can explore with FinStep, with Invest Hong Kong, because I like what Bosco mentioned, right? Get prepared before the opportunities, too late to grasp opportunities. So maybe it's something today after the panel, we can start something interesting within the persons here and with the support of course, the organization.
Of course, I think there's a lot there to be collaborated on. And for me, the potential is immense, and there's quite a few things that are going to come together. I think once we have post reopening of the borders for fluid movement, which will be once things are in control and we see the opening. That dynamic is going to be exponential in terms of growth and opportunities once you have that movement, right? And I think that's a key part of what we'll expect in the GBA coming up. Then talking about these, one of the key things we haven't touched upon is what are the existing challenges that we see with WealthConnect and what can, how can we overcome that? Anybody wants to start on this?
Yeah, I think like Irene and Candy have mentioned, like when facing such a great market, so on infrastructure part or on human resources part, we have to get prepared to face it. But we can't just keep on, expanding the human power, but also we have to rely on the technology. So I think one of the challenges is we have to identify the challenge, and we have to really understand the business requirements. So we really look for, as I mentioned, really encouraging the business side, like the wealth managers, talk with some IT runners. So to really explain your challenge to them to see how we can solve it. Because from my experience, so we do have, as I said, we have Alipay, we have Antbank. So we always directly engage with the business users to understand the pain, their daily business. So this is the only way from technology side, we understand the current patterns, so we can design something to improve it and also make everything, streamline everything. So I would say, yeah, don't fear about technology. Maybe it is not there, maybe no reference yet, but this is what innovation meant to be. So let's brainstorm, do something great together. So I think this is something that we have to embrace together.
Thanks. Ken?
Yeah, so I think on my end, I think maybe this is something that a lot of the financial institutions can take a kind of a piece of learning from a lot of the fintechs, right? I think at the end of the day, if we have 23 banks entering at the same time, and this is only southbound, right? Northbound, you've also got, I think, 12 or 15 banks as well. And we're all entering with, let's just say, not clear client positioning in terms of our strategy, in terms of who exactly we're targeting, what exactly we're offering, and then also maybe not enough differentiation between the products itself. This could smell trouble, right? So I think, you know, on an earlier discussion that we had, although I don't think technically that is the case, but, you know, in Hong Kong, we had 8 virtual banks that were launched at the same time. And I think maybe, you know, thinking back, it really could have been a little bit better if we thought more about the positioning better in terms of each individual bank, which then, you know, it won't be the situation where it is right now, where it becomes, you know, 2-3 banks kind of winner takes all. And then this kind of creates, I think, kind of a messy situation. So I think particularly for a lot of the banks, they really need to figure out, one is what exactly is their value proposition and where exactly are they targeting? Because the nuance between the 9 cities and the 2 special administrative regions, I think is actually quite significant, right? So obviously, clearly someone in Guangzhou and Hong Kong, kind of different, not quite the same. And then last but not least, I think the demand, particularly for the southbound customers, they are so digitally savvy that I think the onboarding and the experience will be much higher. That I think particularly with they're working with Ali Cloud or other companies.
We had a little bit of technical difficulty there, but we have Ken back with us. Irene, what are you seeing as some of the challenges in the space for WealthConnect currently?
Yeah, I do mark a little bit of word here. So I'm so happy when I put down some of the wordings here as difficulties or challenges, but I'm so happy to look at all these challenges. That means we have plenty of solutions to solve all this. I think when you look at the scheme, look at the quota restriction, look at all the limitation in the product shelf, that means we have a lot of room to play. And I have also marked out the opportunities in another sheet of paper, and it is double up the challenges that I have. Basically, it's all go beyond the connect. I just forget about the connect and just focusing on the GBA and what we can do. Basically, Hong Kong has a very key role in wealth, as having a wealth management hub and also digitalized wealth management hub in the GBA. So it is very unique and very bespoke across the world. If we can build something more interesting and outstanding, and to compare with the other jurisdiction, basically we can form a lot of different alliances everywhere and also replicate some good successful stories in the other part in China and the overseas as well. So back to one point that I think it will steer a lot of partnerships because like what Ken mentioned, the 9 cities and 2 special administration, something we need to ask ourselves, are we really familiar for those different cities in the GBA? The answer could be no, at least not for everybody in the ecosystem, not for everybody in the practitioners and the customers. So I think that is a very interesting journey for us to understand each of the cities and what are the bespoke opportunities that we have from a GBA Connect point of view and plus beyond the Connect point of view. So I think it's too many to talk about for the opportunities and challenges. And now it is just stage 1. So perhaps we can get together after all this discussion and put together a lot of partnership together, and then we can see how far we can go.
Yeah, it's going to be about collaboration, right? Ken, go ahead. You're saying something.
No, I was just saying, I love how the fact that the 4 kind of digital players here, we all have like very non-digital approach to taking our notes.
Hybrid mode.
Love it.
Yeah,
I'm not embarrassed to show my handwriting.
I think it's actually a very good reflection of the wealth management industry as such, right? As digital as it can be, and you can provide cutting edge, given there is revenue in availability to spend on digital, the end user still likes that in-person hybrid, the connection as we spoke about, and for that matter, I guess the border opening is going to be one key challenge, that people would want to see their wealth managers and relationship managers visiting them in person. And that's going to be, I guess, one of the key things to be worked out very soon. Let's hope so. Now, we're coming towards the end of the panel. So I want to give an opportunity to 3 of you to maybe talk about where do you see the WealthConnect in 3 to 5 years' time, right? We're still getting out of the blocks. There is a bit of a simulation and everything else happening. The integration is happening. But in 3 to 5 years, what do you visualize it being, or what do you want it to be in 3 to 5 years time, right? One of the things that I see as happening is the integration with things like Stock Connect, Insurance Connect, making it amalgamated and being offered to as a one-stop shop maybe in 3 to 5 years time. But from each of you, where do you see this? Maybe we'll start with Bosco.
Yeah, I think the scheme would definitely, encouraging the interaction between different regions. So the interaction or we were going to be, traveling a lot. So we are not just focusing on Hong Kong, a single region anymore, but the whole GBA area. So we do believe the first on the infrastructure part, like the network, like we will have solution to handle just like the network easier just now. So we will have more established infrastructure to ensure different regions will be different connect. And also, with a few more years, I think right now we still have quota on the personal investment account. So I think we are going to having more, or I think releasing the quota. So we will be welcoming more and more different kind of investors. So definitely we need a hybrid node. We were serving different clients in a very tailored way to each of them. So I believe from the client side, it would be definitely a good sign. So every one of us will be getting a really tailored kind of service, a very good RM. So I think this is a good sign for the whole region.
Thank you. Ken?
Maybe taking a very customer-centric kind of view in terms of, because I'm clearly a customer as well. So 2 things. One is thinking about is that actually giving more access to different types of customers. Because right now, obviously, we are saying affluent and above get access to the WealthConnect. But having said that, clearly all the banks will just be targeting the high net worth clients initially because it's the most profitable. But I hope that in 3 to 5 years that people who are in the affluent or maybe even in the retail front could also benefit from this and truly benefit from this. I put that in commas because it's so important. A lot of times, the investing game is pretty much, particularly in Hong Kong, a very much high net worth type folk, or the private bank game is pretty much a high net worth oriented client game. So I hope more people can get access. And furthermore, maybe even as a client, I hope I can also get further access to new investment ideas that were not available in Hong Kong, but maybe were available in mainland China that I just had no idea about. So that's something that I hope in 3 to 5 years we can get more access to.
Yeah, I agreed with everything that Bosco and Ken said, and particularly on integrating all these connects. Maybe let me sidetrack a little bit, maybe coming out from or go beyond the Connect scheme. I think I was actually inspired by Presidency's GDI's initiative, that's the Global Development Initiative. So this is a wider angle to look at how to collaborate the different multi-stakeholders and also different ecosystems, and how to contribute to the global economy plus the China economy, bridging the gap maybe between the East and West. And then GBA basically have a very key role into it. So beyond those investment opportunities, we can also have a lot of different thematic topics to see whether those opportunity arises, like ESG, like digital assets, like all those ABCD kind of things, like big data, cloud, blockchain, and machine learning. So all these applications can actually bring us even fly higher instead of looking at the connect. So my core view is on the connect and the investment allocation, but wider would be how we incorporate into the China development and the economic growth. So GBA, I think it's a very, very important, and Hong Kong is part of it, and we are already very ready to get into the momentum.
Perfect. That's what we need to hear. We are ready, and we're going to work together after this call to make more integration possible. I want to thank my panelists, Irene, Bosco, and Ken, for a very engaging discussion where we have gone through a host of different points on WealthConnect. And thank you once again, three of you, and I look forward to having you in our future events. And for the audience, we'll soon be getting to our next panel discussion, which will be focused more on the digital side of things. We will be having James de Blasio as the moderator, so stay tuned, which will be starting in 4 minutes time. So once again, thank you to my panelists, and
Hi, so welcome to GBA WealthConnect Forum 2022 Digital Wealth Management What's Next panel. I'm super excited that we have all the speakers, exciting questions, discussions, insights for our delegates joining us live today afternoon. So let me start by introducing James DiBiasio, the founder of the DigFin Group. He'll be our moderator for the session. So I hand over the session to you, David. Many thanks.
Thanks, Asim, and welcome everybody to both the GBA WealthTech Forum and, of course, to this particular panel. My name is James DiBiasio, and I run DigFin, which is part of AMTD Digital. I'm based in Hong Kong, but covering the region. It's exciting for me to be part of a wealth tech event. I've been part of the wealth tech committee in my days at the FinTech Association of Hong Kong, and also just in my previous life, did a lot of reporting and writing about asset management in general. And what's happening is really cool. There's just so much stuff going on. And we are going to go through a tour of the highlights to give you a sense of the enormous change and opportunity in asset and wealth management and wealth tech. And we've got 3 speakers that are going to help us do that. And first, so let me just lay out the way that we've decided to structure our discussion. The discussion is not scripted, but rather we've just simply tried to come up with a framework to deliver what we think will be interesting and helpful to you. That is around 4 things. We want to look at what's happening, not just in Hong Kong, but around the region. We want to look at the platforms, the way that businesses in wealth tech are being organized or reorganized. We want to look at distribution, how products, investments, strategies are getting into the hands of consumers in ways that are new. And finally, we want to understand, what are these products that we're talking about? What is it that we're trying to push through these pipes? And finally, we'll wrap it up to understand some of the implications this has for doing wealth tech business in the Greater Bay Area, linking Hong Kong, Macau, and the major cities of Guangdong. So to help us with this today, let me very briefly introduce our 3 speakers. We've got Eric Niosewe. Eric is joining us from Singapore, so a big friendly virtual welcome to our guest. Eric is, he's had a variety of roles in his background. He's currently member of the board at RF International Holdings, a venture company. Helen Leung, who is at Mercer Investments, where she is head of the FundWatch TM Solutions team. And finally, Kai Mak, who is head of wealth management at WeLab Bank, one of the 8 virtual banks licensed in Hong Kong. So welcome to Kai, Helen, and Eric. Now, as I said, we want to start with platforms. What we want to call these, I guess, the organizations of today and tomorrow that are creating businesses in this space. Eric, from your perch in Singapore, you're looking at a variety of things to invest in. You've been affiliated with various wealth tech businesses. What are you seeing in terms of what's happening with the rise of, whether it's virtual banks or mobile brokerages, whatever it might be? Tell us what you see going on that's happening right now.
Great, thanks, Jay. Hi, everyone. My name is Eric. Okay, so what I've seen in the last, I would say, 24 months in relation to the GBA area is the what do you call the surge of cross-border kind of platforms, right? So, case example, in the recent times, you have a Singapore fintech firm called Stashaway that has launched into Hong Kong. Right, Stashaway, basically it's a robo-advisory platform that targets individuals or high net worth for stocks investing. Right, that that doesn't have the time to look at stocks every day on the screen. And then further back, you have a digital securities exchange, ADDX, right, that became quite synonymous, and they also back in September 2021 received a $200 million allocation, which is under the QDLP scheme. Basically, it's essentially allowing China investors to basically invest offshore onto ADDX platform that basically has digitized products or tokenized products in terms of whether is it bonds, hedge funds, structured products and stuff like that. So from a platform perspective, I do see that number one, it is promulgating cross-border. Two, it's ranging from exchange platforms, particularly digital securities exchanges, not about crypto exchanges, but more to say licensed, regulated digital exchanges, as well as robo-advisory platforms, like I mentioned, Stashaway. And there's many others that is already, whether it's from Hong Kong into Singapore or vice versa. Last but not least, it's basically your digital banks. It hasn't been that prevalent yet for most parts of the wealth industry, but going back to the notion of digital platforms, I think securities exchanges or digital security exchanges is becoming quite synonymous. Think about the tokenization of investment products, where we used to not be able to look at bonds in a different way, but now it's basically accessible from a digital standpoint. All right, over to you, Jay.
There's a couple things there that themes I'm getting from your comments, Eric. One is around access to new types of asset classes, private
Correct.
markets, for example, or private equity. And another is using technology to transform the securities or the investments themselves.
Correct. I mean, the recent news, if you read, ADDX has launched or listed digital securities in a form where you have KKRs coming in. You have the likes of potentially BlackRock and stuff like that. Big names that we don't usually, or even high net worth usually, don't really have an accessibility. But now, with the digital securities platforms, whether it's inbound or outbound, or think of it as a distribution, it is now democratizing the access to these hard to access products.
Right. I want to get some of the others to talk about this issue around what you see. Helen, is this concur with what you also see going on? These themes around access, these themes around new digital forms of old types of investing, and is there anything else that you see that Eric didn't cover?
No, I think Eric bring up a very key trends we're seeing in the markets, that the digitalizations and the digital capabilities are no doubt a very important driver and differentiators for companies to grow the business in the market within this financial services and the GBA. So we continue to see the digital capabilities have been playing a very key role across the business models, propositions, relationships with clients and the business partners, even over the 2 years pandemic that actually speed up all this development. So we see these platforms across different asset classes or different subsectors within the financial service providers. They've been using it to transform the business dynamically and speed up things, benefiting from all the good things like scale up, lower cost, productivity. And I think the important thing is the interactions with the clients. So this is very consistent with what we see.
And just on that point, Helen, that interaction with clients, that last point you made, are the biggest changes happening in the retail direct-to-consumer space, or is it happening in the access to, let's say, the high end of retail, the high net worth segment, or institutional, or all the above?
Yeah, I think this is just happening across different segments. Take our business, for example. Our business was launched, Mercer Fund Watch was launched back in 2019 as a fintech proposition to deliver Mercer proprietary fund ratings, publicly available in Hong Kong and Singapore. So the digital platform enables many users like individual investors, financial advisors, wealth management and fund distribution platforms to access these fund ratings, our investment insights very conveniently. So it helps our growth. The number of asset managers sign up for these rating services and the user of these services has been growing across the years. And it also helps us to expand our business, to roll out into new markets. Like this year, we plan to roll out in Thailand, Taiwan, and potentially to make the fund rating available for GBA Wealth Management Connect eligible investors. So we see the key trends like what Eric said.
I think the story there, based on your example, and there's others doing this, is what we're seeing is services that used to be exclusive to large institutional investors, sovereign wealth funds and pension funds, are now being made available further down the pyramid scheme of client types, first to high net worth, and then also even down to the retail level. Would you agree with that?
Yeah, exactly. Yeah.
Okay, and that's a powerful change. Kai, you work at WeLab Bank, virtual bank, and Eric had mentioned the rise of virtual banks. He thought it was kind of early yet, but obviously you guys have taken the initiative in your own business to try to be relevant in the wealth space. Tell us what you see going on in terms of the way that new platforms and models are appearing.
Yeah, good morning. Good afternoon, everyone. Good afternoon, James. I think I just want to first echo with all my panel speakers that a lot of things actually are now going on in the market, especially in the digital wealth space. And I think the current development of digital wealth is very interesting. And I'm pretty sure it will become even more interesting actually in the next 1 to 2 years. What's happening is over the past few years, the adoption of digital banking has grown rapidly, thanks to better mobile services by traditional banks and the rise of virtual banks. And COVID plays an important role to drive the user adoption. And nowadays, mobile channel has become a default channel for lots of Hong Kong people for accessing the general banking service. And amid this backdrop, the natural extension is to expand from general banking services into wealth management service. And currently, I think for a lot of traditional players, all the big banks, they still use relationship manager and branch sales model. These are still the core of their business model. And on the digital side, they mainly use that channel to provide execution service for some simple financial instruments like stocks or mutual funds. But on the other hand, for all the new players like virtual bank, including ourselves and other mobile advisor, we're getting ready to offer new service to the market. And a number of virtual banks are in the preparation stage of providing wealth service. And at WeLab Bank, actually, we are prepared for more than 2 years. And now we are in the final stage of launching a brand new digital wealth advisory service to the mass market. And at the same time as
I want to talk about that, but I want to talk about that when we get to the product part of the conversation, guys. So I'm going to save that because I think that's very interesting, and we definitely want to spend a little more time on that. The next big topic I want to talk about is distribution. How do these new platforms get their products in the hands of actual investors? Helen, can you give us a sense of what you see happening in this space?
Sure. So there are a few areas we observe. I think we shared in the earlier dialogues that the digitalization of fintech or virtual meetings like fundamentally reshape the interactions between the customers and the wealth management services providers. So I think this is no doubt. However, they cannot totally replace the face-to-face and physical meetings. The other thing we see is the increased automation at the platform in the distribution side that helps to make the process, the efficiency, and also the overall speed and the user experience. We see well-established firms not only adding more resources in technology, but also to partner externally with successful fintech services provider. So they just want to have a stronger digital capabilities. And then we also have our panel speakers mention the rise in discount brokers, passive investing strategies, automated investment strategies are also rising trends. And also the robo advisors, we see the growing AUM, the use of AI, machine learning, big data to analyze client behavior, investment and appetite. These are all happening. And using the innovations to sell investment products. And I want to add a little bit more about the data point. Well, in the past, we may use traditional data like collecting customer demographics information to help us customize investment solutions or wealth management services. But then with the technology, enable us to collect this data generated continuously from each customer touch point. And this is really a big change and help facilitates matching the needs of the customer with personalized solutions. And also furthermore, some strong technology platform may also be able to understand the intention of the customers, to understand how they make the decisions. So these are all very powerful, we were seeing.
Yeah, so it seems on the one hand, we've got these new ways, we have new platforms, we have more, I think, sophisticated means of distribution in the sense that the RMs can better understand the clients and they have perhaps different ways to service them using technology, get those sorts of insights. And you can be more efficient as well, the whole back end that you alluded to, Helen, in terms so that maybe you need fewer RMs to handle the same number of customers, or with the same number of RMs, you can scale up your customer base. But at the same time, from your comments, I gather that both in terms of helping the RMs and also, I guess, giving them even more sophisticated insight into the customer, the role of, in this case, we're assuming a bank, whether it's a private bank or retail bank, is still key. That's, I think, implied in your comments. Do you see the role of distributors spreading beyond the classic banks that have always dominated the sale of, say, mutual funds in this region?
Yeah, could be, yeah.
And what would that look like? What are there alternative distribution channels that are actually here and operating, or is it still kind of theoretical?
Well, we see the distributions of products or services no longer restricted to really the traditional banks. It could be different types of platforms. The traditional business might not be just banking. So this is really blurring the differences of the business models.
Yeah, okay, great. And just would love to get the others to jump in with their comments here. Eric, anything on distribution that you think we haven't covered?
Yes, I think particularly in Hong Kong or GBA, OSL, I think it's based in Hong Kong. I mean, fantastic firm. They have grown, year on year. And I think the recent times they had partnered now with Interactive Brokers for its crypto services. And now, what may happen is that once, obviously, if OSL starts to, or if they have already taken on digital securities, then the distribution platforms now no longer sits with the bank, right? The bank could actually structure products and list it on OSL, for example, and distributes from there, right? And what I like about these platforms is that, I mean, I'm an account holder of ADDX, and what I like about these platforms is that you and I don't really have time to sit behind the screens to invest in stuff. But what is useful is that it prompts me whenever there's a new product, there's a new listing. And it's so easy to now with the iPhone or a mobile phone, you have face recognition, you look at it, it logs you in, and a whole wealth of information is in there. But what I find it's very useful is when we talk about RMs, is when you want to have deeper information that's not available on the platform, where you want to have a more insightful discussion to say, who are the founders, what's the company about, or when it comes to private equity. So the RMs actually come in very handy. Just touching a bit about Helen's mention about data. I also noticed that most of increasingly wealth investors are looking at ESG stuff. So in Singapore, there's a company called Stacks, STACS. They recently launched a ESGpedia, which means that all listed firms or SMEs who are pursuing ESG stuff it's all listed there in terms of their ratings and stuff like that. So I thought that sort of information could be very nicely plugged into, Mercer, even on the fund level, where if it's a fund and it has some ESG elements, it can be intertwined or enhanced data that goes into a platform.
Well, then you guys are going to have a coffee after this.
Yeah.
Sure.
And just staying on the distribution topic one more time, but thanks for those insights, Eric, is Kai, obviously WeLab Bank is, well, it's a bank, but it's a new bank, digital only. How do you approach the concept of distribution? What does that mean to you that might be different than if I walked into HSBC or Standard Chartered?
Yeah, this is a great question. I think we will all agree that digital now become a necessary channel, and actually given all the behavioral changes in different parts of our daily lives, digital trend has become inevitable. And I think digital doesn't only mean going online. It means better services like access to the service anytime, anywhere. It means more streamlined transaction process and more user-friendly experience. And to us, it means actually less pressure from salespeople to push any product and less bias in product recommendation. And also it means more transparency in terms of investment information and fee structure, et cetera, et cetera. And more important, I think digital to us also means we can provide the wealth solution to serve along the end-to-end investment journey with our user. While most relationship managers mainly focus on selling product at the point of sales, and digital, I think, is a great tool to continuously engage users and keep track of investment progress, for example, for our user. So it's ongoing in nature.
Right. And again, it's back to that, something that a private bank traditionally would have been able to provide only to its wealthiest customers. Now you can provide at least a basic version of that kind of dialogue to anybody.
Yes, correct. Yeah. After all, I think investment is not just about the financial part itself. More importantly, it's about the advisory service, about the whole investment journey.
Yes. Okay, great. So while I'm with you, Kai, we want to now talk about product. I promised I'd ask you about some of the products that you guys are imagining up in your lab with your partner at Allianz. And happy to hear what you have to say about that. And in particular, though, my interest in this is how is digital changing the way that products are created and conceived? What is the nature of these products today that might be a little bit different than what we would have had a couple of years ago?
Yes, thanks for the question. Before I talk about more how we approach the problem digitally, I would like to step back a little bit to talk about what kind of services actually are being offered in the market by those traditional banks. And it's very interesting, actually, over the past 1 to 2 years, we observed that a lot of big banks are pretty aggressive in offering digital wealth service. And while RM and branch sales model is still the major channel for them to provide advisory service to premium segment, as you just mentioned, they try to use digital channel to tap into the younger and mass customer segment. And they spend lots of resources on rebranding as well as investor education. I think it is a good news and important driver of more widespread usage and adoption of digital wealth. But however, the digital channel still mostly focus on stock and single fund product, and it is an execution only trading platform to them. And these actually provide lots of room for other new digital players to offer differentiating services. For example, some of the existing mobile advisor in the market offer model portfolios, which in my personal view are definitely a better investment solution compared with single fund for diversification purposes as well as for long-term discipline investing. But if you ask me, I think we should push the boundary further to really change the market practice of sales-driven and product-driven sales model to truly digital advisory service. And our approach is more like we try to add more value-added digital advisory services to serve our client along the entire end-to-end investment journey. And secondly, what I can foresee will happen actually in the next couple of years is, in addition to some simple product like mutual fund, model portfolio, or stock, probably we will see more broader range of products to be available digitally. And more importantly, probably we can try to integrate them together. We should treat all the stocks, fund, and other financial products on a more holistic manner instead of on a more siloed basis. And on top of that, as a virtual bank, we try to integrate our banking services with wealth services and actually with advisory elements.
People in Asia have been talking about trying to create an advisory or advice-driven fee model rather than a product-based model in selling, at least mutual funds or stocks. And it hasn't really worked as long as you're dealing with the banks as your main channel. And in the West, in places like the United States, the UK, Canada, the advisory-driven model that's dominant is often more about tax than it is about the products themselves. So what has to happen for this to actually work now? I mean, is it just about putting more products together in a cheap, efficient way, or is there something else that has to happen so that you can actually get people to pay you for advice?
I think speaking about the fee structure, we approach the problem, I think, more from the user perspective, what the user preference really is. I think in Hong Kong or Asian market, I think most of the investors still prefer to be charged on commission basis instead of advisory fee model. So I think both fee structure has their own merits, but if ask me, we better design the fee structure according to the user preference. And currently the user preference is still commission based. They prefer to, for example, in mutual fund world, they still prefer to pay upfront subscription fee instead of an ongoing annual advisory fee.
Helen, what do you see happening do you think this will change? Can the rise of wealth tech create a new dynamic?
Yeah, I think that's the things Kai just mentioned is all very interesting. It's basically enable more players, more service provider, and more options for the end users or for the customers. So this is a very good development here.
And Eric, you've mentioned some of the top tier players doing different things in wealth tech and digital assets. How confident are you that some of these new players or these new models or these new ways of structuring products together will provide a credible alternative to what, say, the banks are already doing?
I think the platforms or the platform providers, as I spoke about, is not to replace the banks, but it's actually to complement. Complement in a sense that, say, for example, instead of developing the product range of digitized securities, for example, right, which they don't have the infrastructure, they could partner with one of the digital license service providers out there. But what that means is that the information is provided to the bank or to the relationship managers or the private bankers to be able to digest and dig deeper how to value add more to their investors. So say, for example, all of us here, if we have an account with one of the digital securities exchange and we want to invest in the products and we get prompted, right, on the app, the first thing that I would do is likely is to give a call to the RM that's being assigned and said, hey, I'd like to know more that's what's not on the platform, right, the data. And that's where it increases the value add of the RMs to actually upskill, perhaps not from the traditional KPI basis of pushing products, but more to, like what Helen may say, or understanding the client, or I would say more understanding the product dynamics vis-a-vis what's happening on a macro level, right? So I think it forces the traditional market to become more sophisticated to service the wealthy individuals. Yeah.
Right. So those RMs are more knowledgeable and can provide meaningful advice.
Precisely, yes.
What is the moat that these fintechs can build, at least at an industry level? UBS and Morgan Stanley have vast resources. They're run by clever people. What's to stop them from simply building this capacity themselves?
I think if you look at, very good question. You look at UBS, and it's not just UBS. You have Citi that has Citi Ventures. You have Stanchart with SC Ventures. They have been amassing a lot of fintechs from the wealth, from digital bank, and they're basically plugging like a jigsaw puzzle, right? Mm-hmm. Bringing the best of what's out there into the bank, fusing the bank's infrastructure, the know-how, the distribution, right? The key thing is banks has a massive distribution that fintech firms may take, I don't know, about 5 years to build, right?
More than that, yeah.
So the banks has certain upside, which then obviously they may not have the time to actually build all this new tech area, and that's where they are collaborating with the private markets to bring the tech in, right? Yeah, so that's what I'm seeing about the likes of UBS that you mentioned.
Mm-hmm. Okay, great. So this has been very illuminating. Thank you, all three. I'd like to now sort of bring this back to why we're here in the first place, which is to talk about GBA, the Greater Bay Area. As everyone I think knows, we're looking at cross-border, cross-boundary opportunities between mainland China and Hong Kong, Macau. 3 currencies, 3 different regulatory regimes, 3 different markets with their own customs and habits. So when we think about these 3 things, platforms, products, and distribution, how are these going to be leveraged to make GBA work, whether that's for firms on the mainland side or firms on the Hong Kong side? And I think all of you will have something unique to bring to that. So Eric, I'll start with you, since we started with you on the platform overlook. What do you think will be the way that, particularly from the platform perspective, what is the challenge and opportunity with GBA?
I think the opportunity is I'm a big believer of convergence, right? So when you mention about 3 territories or 3 regulators or regimes, it will be consolidated, right? It's just a matter of time. Second, then the challenge is for the fintech firms or even banks out there is how to position themselves when that conversion takes place. Think of it as in the current climate, you have the digital assets, the cryptocurrencies on one side, which is unregulated. You have digital securities on the other side, but underlying is blockchain, right? And I'm looking at, from a Singapore context, that it seems to be a convergence taking place. For example, I mentioned ADDX earlier again. They just issued a press release that they now can take in cryptos as a form of collateralization as a MES regulated securities firm, right? So that's something that it's very uniquely, refreshing, but yet they are doing it very carefully. But that's a form of convergence in a sense, right? So with going back to GBA, convergence, and the challenge is how to position yourselves when it happens.
On that last point there, I don't know if I don't think you'd be allowed to use crypto as a form of collateral in a mainland transaction, but CBDCs or some sort of regulated stablecoin or other digital liability could be the bridge that closes this. I don't know if you're seeing anything on that front.
Not yet, but that's a very interesting point to moot. Perhaps, if there's any regulator from China is looking at it, that could be something that, well, it's backed by the central bank. It's domestically recognized. So I think that could be one potential source of avenue for collateralization.
Okay, and then just on this platform product, Helen, anything you want to add to color in some of Eric's points?
No, I think Eric covered very well.
Okay, then we'll move on. I'll stay with you though, Helen. Let's talk about distribution. Sure. What is distribution going to mean in the GBA context? How are people going to be able to get their products or strategies in the hands of investors on the other side?
Yeah, I think in a current moment, the pandemic the travel and the quarantine requirements do make these distributions of products a bit difficult. But this is we see as a something will be loosened in the longer term. But then stepping back a bit, we see the global wealth creations over the past 2 decades, and then China is a very key driver, and hence we see a great demand for wealth management services and products. So as well as potential for service providers for business. So this is no doubt. And for the very high saving rates at the China investor side, so to give a good options, investment options, putting the risk appetite or the needs of investors onshore in China is very important. So I think with the GBA Wealth Management Connect, enabling eligible investors to invest offshore, and also for those interested to invest onshore, this is a very important channels. And then the question is how the wealth management service providers be able to play a role in this. Well, let's bring up to today's topic is really the digitalization is of the platform will help to overcome some of these medium-term or longer-term barriers and help to speed up the growth and the reach of these products to the investors.
Wealth Management Connect is brand new. Is it so new? Is it not that new enough that we can begin to draw some lessons about what works?
I think it's very new, still very new. It is. I see it's still in an initial stage.
When it comes to that digital, tools enabling us to cut through some of those challenges, Helen, what do you see as how? Let me put it this way. How ready do you think are firms in Hong Kong to be able to do business once they're allowed to in the way they want to? How ready are they in terms of their tech, in terms of their organization to handle that?
Yeah, I think as our fellow panel speakers shared today, the different players in the market, whether they're traditional business models or the new technologies developed platforms, they're all very keen and finding ways to strengthen the in-house or partner with external fintech service providers, so to enable the digital capabilities and get prepared for these markets potential. So I think it's there, but the question is really how can they link up onshore? I think one of the example I want to share is the media promoting the services. So what's digital media available outside is like we have Instagram, we have Facebook, we have LinkedIn on B2B or B2C or B2B2C models. So what else we can do beyond like WeChat or Bilibili? So this is something we can think more about.
Have you seen anybody come up with an example that's kind of like a post WeChat way of reaching out to investors in mainland China?
Yeah, still looking forward to.
Still looking forward to it. Okay. All right. Well, let's ask then. Kai, you're the perfect person to ask. You are in the front lines. You are right in the trenches of this. What's the way that you guys are thinking about approaching clients, investors in mainland?
Yeah, I think in this section we focus on the topic of digital wealth, and I think digital wealth is definitely highly relevant to the GBA WealthConnect program. And I strongly believe that digital will be the primary and the best channel to provide wealth service across the border remotely, and is also the most cost-efficient way to serve a huge population in the GBA area. And we can also reach out to them very quickly and expand the market share very quickly. And I think as previously discussed in this section, I think in Hong Kong, probably we're going to see some very interesting digital wealth changes and enhancement in the next couple of years. And probably if you ask me, I would predict that actually we will provide more digital wealth advisory services and more value-added functionality to serve the customer throughout the entire investment journey. So you can imagine, obviously, currently the regulation doesn't allow any advisory service for the GBA program. Is only allow actually execution-only service. But you can imagine when the regulation begin to relax, and by then actually we can easily export what we have already done in Hong Kong or in other parts of Asia with all these more advanced digital service to the WealthConnect platform and try to serve all the population in the GBA area. And apparently some choice would be required to fit into mainland investor preference in terms of product offering, languages, and the way the advisory process actually is presented, etc., etc. But I strongly believe that those who can provide the best digital experience to customer would be the winner in the GBA program.
How ready are firms in the fintech world to provide that customer support?
I think we are still in the initial stage, not just WeLab, but I think the entire fintech world, and even the traditional banks, as we can see from the early results of the customer acquisition momentum, is a bit slow. But I think all of us are pretty optimistic and strongly believe that the program actually is a good one and provide lots of opportunities to everyone in Hong Kong as well as in the GBA area. And I think we're trying to figure out different things to make it a success, including choosing the right partners and then providing the right digital solutions, etc., etc.
How important is it to be on the ground in some way, shape, or form? We were talking about digital, so obviously sort of remote, maybe operating out of Hong Kong, but many banks, whether they're from Hong Kong or they're mainland institutions, obviously have a presence, often brick and mortar presence in Guangdong. WeLab Bank's parent has a fintech business, several fintech businesses actually in Guangdong. So I don't know if you need to leverage that. How important is it going to be to have some kind of physical presence to be good at this?
Yeah, I think the physical presence in mainland China definitely is a big advantage. A huge distribution network and huge RM sales force definitely would help. But think about it, I think ultimately it is a Hong Kong entity, the Hong Kong banks actually who provide the service remotely to the mainland customer. So instead of we're not talking about the mainland entity or mainland banks serving the mainland customer, then that's not GBA. We're talking about Hong Kong banks serving mainland customer. So the only way, to be honest, is to do it remotely and digitally.
Okay. And final question to follow up on Helen's point about the social media and marketing to reach out to people. Is it all still about WeChat, or will there be alternative ways to reach retail investors at least? Kai, do you have a view on that?
Yeah, I think digital is very, very all-rounded. It's not just about mobile service, but we are talking about social media through different channels, and more interestingly, probably not just about channel, but also the way we present to the potential customer. For example, we can make it more trendy, make it more fun instead of make it so professional or traditional that, be honest, a lot of young investors find it so boring to use traditional services.
Okay, we're about out of time. Eric, last very quick question for you, sir. Since you're from Singapore, when you look at the potential for GBA business versus, say, cross-border opportunities in Southeast Asia or around Asia Pac, on a level of 1 to 10, how excited?
I would say 9.
Okay.
The reason is because the not common saying, right? If you ask me that what is there to invest in Japan, you know the big names. But the interesting part is we don't know actually a lot of things of a lot of investment opportunities in Hong Kong or even Guangzhou or even in the GBA area. So I think the cross-border interest it works both ways. Investors from GBA would like to know what's there to invest in Southeast Asian markets like Indonesia or Vietnam, and likewise for me, I'm keen to know what's there to invest in Hong Kong or even in the GBA area. So I think, you can, open an account. Let's say if I go to Kai's bank and open one, but I still don't know, right? So I need to talk to, say, Kai or Helen. Hey, can you give me a rundown of what opportunities are there, right? So that human touch is just going back to the final touch point. The human touch element is still necessary, regardless whether how much we want to push tech into the picture. There's still a human element that we cannot forget. Yeah.
Absolutely. Technology is a tool. It's not the business itself. Look, we are out of time. Thank you so much. I want to thank the audience for tuning in. I want to thank VFF for hosting the event and inviting all of us. And of course, give at your computer desk, please give a round of applause to Kai Mack from WeLab Bank, Helen Lung from Mercer Investments, and Eric Neo from RF International Holdings. For DigFin, I'm James DiBiasio, and I hope you all have a great day.
Good afternoon, everyone. Welcome to GBA WealthConnect Forum 2022 Role of Family Offices in GBA Managing Generational Wealth Transfers panel. We're super excited for our discussion today, and joining us from Hong Kong, we have our moderator, Albert Yip, Chairman of the Syndicate Capital Group. We are so excited for having you with us, Albert, and for our wonderful panelists, who I'm gonna let Albert take away the discussion, and let's get going.
Thank you, Asim. Good day, everyone. Welcome to the GBA WealthConnect Forum 2022. This is the panel of the role of family office in GBA, managing generational wealth transfer. This panel session is sponsored by Invest Hong Kong. My name is Albert Yip, Chairman of Syndicate Capital Group. I'm the moderator of this panel. It is our great honor to have three prestigious panel speakers today. Please help me to welcome Ms. Christine Ho, Deputy Group Head of Family Office, Invest Hong Kong, and Mr. Parkman Yu, Investment Director and CEO, Basel Capital. I need to apologize that Mr. Andy Liu, who is the Investment Director of CRE Alliance Hong Kong Company Limited, he is not feeling that well today due to some emergencies, so he's not able to attend. But I'm sure every one of you will continue to have very exciting discussions over here with our panel speakers, led by Christine Ho as well as Parkman Yu. Welcome to all of you again. I'm sure our participants have already read your impressive bio before joining this panel, so I will not go through it again. Now I'd like to go straight to our discussions today. The role of family office in GBA, managing generation wealth transfer. The first questions is, well, I'd like to provide some background about our family office here in GBA areas. In recent years, many Chinese family offices have increasingly allocated access beyond Greater China. As a recognized international financial center with close cultural and geographical connections to mainland China, how do you think Hong Kong has been positioning itself in the GBA as a hub for family office business? Now, lady first, hi, Christine, because you are the Deputy Head of Family Office at Invest Hong Kong. You might take the lead and help us to share your insights before Parkman shared his comments from industrial perspective.
Thank you, Albert. Hi, Parkman. Nice to be on the same panel again. If I can share the experience as a wealth management and private banking practitioner of how Hong Kong is well positioned in this wealth management, this wealth transfer. But if I may define this wealth transfer, I think in the context of family office, it means the assets and wealth transformation, as well as the family succession. And in that context, I think Hong Kong is well positioned as the hub for family offices and family business. The reason being is that based on our observation, family offices actually have more demands for financial hubs to convince them to set up their presence in there. The reason being is that families have demand not only in investment, but also demand in wealth succession, lifestyle, and social impact. It's for mainland Chinese families, they have an additional demand, which is to facilitate them to go beyond the Greater China, as Melba you just mentioned. Hong Kong not only has the infrastructure to meet all the demands I just mentioned that's posted by the family offices, but it also has the infrastructure, but the infrastructure itself is also world-class. If we look at investment, for example, we have abundant deal flows, which I'm sure that Portman can share with us later on. Deal flows not only from GBA, as well as in Hong Kong, as well as from overseas. We have also a pretty ideal environment for family office and the family business to operate in. For example, the simple tax system, the straightforward immigration policy, the abundant financial and professional talents, as well as very simple and straightforward regulation on operating companies. Last but not the least, I think the capital market is important as well, because it's where the investment opportunity can be monetized. And Hong Kong's IPO market, as well as the robust private deal and M&A market, provides a very sound environment for a family office to monetize the investment opportunities. And secondly, if I can touch upon the lifestyle, lifestyle is something that family office focus on when they consider setting up a operation center. Hong Kong has the most embracing, I have to say, melting pots of different cultures, Western cultures, Eastern cultures, Chinese cultures, and it's also the metropolis that's nested in the beautiful mountain range as well as the seashore. So in that context, I think that the living environment is ideal, and everyone can find their own living environment that they feel comfortable to live in. And if we can look at the context of family succession, this lifestyle goes beyond the living environment. It also points to education and culture, which I think the families, patriarchs are very much focused on. They want to make sure the next generation can grow up in an environment that they can be learning the Eastern, preserving the Eastern culture at the same time learning the Western methodology. So in that sense, that Hong Kong is a perfect place to be, because we not only keen to preserve the Eastern culture, we also that keen to introduce the Western style, Western culture, the Western art. So this is the when it comes to the lifestyle. So in a nutshell, I think Hong Kong has everything to offer, as well as a world-class infrastructure to meet the family office demand. That's what makes Hong Kong unique in terms of well-positioned to be a family office and family business hub in the GBA.
Well, very good point, so Christine. I think, well, most of the time we talk about Hong Kong, we always focus that Hong Kong is an international financial center. And I think that you bring some very good points, mentioning that, well, we family office have more focus on lifestyle as well as cross-culture too, which is very important. And Hong Kong is definitely international places where we have a lot of cross-culture, helping the family office well, to look for lifestyles across the GBA areas. So Parkman, what's your view? Would you mind to share your views from your industrial perspective? Let me know more about what you have been doing in the past, as well as your comments that related to these questions. How do you think Hong Kong has been positioning itself in the GBA as a hub for family office?
Yeah, I agree with what Christine just mentioned about Hong Kong. I think we have a very unique position in the Greater Bay Area, where it is not only an international financial center, and also, as Christine mentioned, the East-West Center for International Cultural Exchange. So I think for family office business that involve highly custom-made services, it is extremely important for the service providers to understand different values and cultures of their clients. And so they can provide appropriate solution to them. And I would say over the past several decades, Hong Kong has successfully developed many professionals, such as bankers, lawyers, and others who have the domain knowledge, not only in the Chinese world, but they also learn about the Western world. So they understand and embrace different kind of values and business practice. So I think this is extremely important for Hong Kong as an international hub, and for the professional to understand both sides of business practice and value, etc. So this is one of our competitive advantage, and that's differentiate ourselves in the GBA. Yeah.
Well, thank you, Parkman, for sharing your views. So here comes my next question, which is quite aligned with the first one. Well, with the significant economic development in GBA, we've already seen a lot of successful companies leading in their respective industry, such as the technology spaces. We find great success in the GBA areas where there's a lot of startups, okay, on the technology areas, and they're doing great jobs. So as family office investor that needs to deploy capital for growth, what are the opportunities that you may find attractive, and how you would describe the ecosystem there? Well, Parkman, well, since you just talked about family office, the economic development in GBA, would you mind to share your views?
Yeah, sure. I think before diving into the specific opportunities, maybe we can just take a moment to talk about the key drivers behind this vibrant startup and new economy ecosystem in the GBA. And I think firstly, it is similar, actually a little bit similar to what we have seen in the Silicon Valley. It is the convergence of academia, private sectors, and the government. So, for example, Hong Kong houses many world-class universities. We have leading faculties in medicine, biotech, engineering, etc. And while Shenzhen, for example, have a lot of top-notch technology companies, and needless to say, local government in the GBA, they're very supportive and taking many initiatives to promote the startup environment. So these three important segments jointly will create an environment and eventually resulting a steady stream of well-trained engineers, innovative ideas, and also experienced business people. So that's the first point. Secondly, I think there's a high density of wealthy investor and financial institutions. So the amount for both personal and institutional wealth in the GBA makes it the perfect location for business growth, right? In addition, I think majority of the startup investor like us and venture capitalists, they not only just provide financial resources, but they have also valuable support in terms of mentorship, business connection, business development, etc. So that's a whole package, not only just giving money, but also other value-added services. And thirdly, as Christine just mentioned, it is the infrastructure, right? Where we have world-class cities in the GBA, such as Shenzhen, Guangzhou, Hong Kong, and Macau, that can host, large conferences and events. And not only we have highly rated conference centers, hotels, this city also provide top-tier experience in dining, cultural and other unique entertainment. So people just are very willing to drop by and then to meet other people. And that's how ideas can exchange and people can grow their connection within that ecosystem. So I would say the above 3 points combined together can trigger a flywheel effect on innovation and create a positive feedback loop in the industry. So the success of one company can train up many people, and eventually that create wealth in both corporate and individual level, and in turn bringing up another generation of startup and entrepreneurs. So that's how the ecosystem I would frame it. It's more or less similar to what we have seen in the Silicon Valley. And then back to the question on the specific, investment opportunities, we have been quite focusing on artificial intelligence and enterprise software, where we start to witness the flywheel effect just mentioned. So with the first or second generation company become more established and mature, so to name a few, such as Tencent, Huawei, DJI, and SenseTime, those companies and their employees, they continue to reinvest the knowledge and experience, and that can create another new wave of other companies, right? So for family office investor, this opportunity set is very exciting for us. And there are also other interesting areas that we're looking at, such as robotics, fintech, industrial IoT. I think those are the areas we should work to explore.
Well, thank you for Parkman by giving a lot of good examples, which is quite easy to us to better understanding the ecosystem in GBA. And thank you for comparing to Silicon Valley, because it's quite easy for us to get understanding of what is going on with the GBA ecosystem, particularly when you mentioned about the 4 driving factors. So, Christine, from your perspective, what are the opportunities that you may find attractive family office investor, and how you describe the ecosystem there from the, government authority perspective? Christine, you mind to share your insights?
Sure. I think from Albert, you point a good angle that from family office point of view, as well as from the government point of view, where there's a favorable side or the investment lane that has the blessing from the central government. And from the family office point of view, I think that besides the investment opportunities, they are very practical as well, that they want to go into an area that operationally is cost effective. So in that context, I think that if we look at the Hong Kong's position, and also that our position by the National 14, the plan, Hong Kong is assigned with a position to help open up the market, the mainland market, to foreign investors. Hence, we've seen that a range of schemes that to achieve such target, for example, CIPA, Shanghai Hong Kong Stock Connect, Bond Connect, Wealth Management Connect, Insurance Connect. It's all about how to help foreign investors to more easily invest into mainland markets. And if we look at SIPA itself, and also that the industries that's where Hong Kong company enjoys the national treatment as the local company, if we identify those industries, it's easier for foreign investors to land in Hong Kong and use Hong Kong company to invest directly into the mainland market. By doing that, we have the best of both worlds, meaning that being Hong Kong company, because we enjoy the policy blessing to have direct access in those industries. At the same time, we remained in Hong Kong, we enjoy the free capital flow, the simple tax system. So we enjoy the best of both worlds compared with local Chinese company. They have the market, but they don't have free capital flow. But foreign companies, they have the free capital flow, but they don't have direct access in the mainland market. So if I can cite two examples of those industries, this is just food for thought for families that want to take advantage of this blessing to more easily invest in those industries. One industry is e-commerce. So for example, if a conglomerate, overseas conglomerate, want to access the mainland e-commerce market or the retail market, they come to Hong Kong and set up a company to conduct this cross-border B2C e-commerce in mainland. By setting up these Hong Kong company, they can enjoy a few benefits. For example, there are fewer complications in getting various licenses in mainland. For example, the internet content provider license, because the Hong Kong company has enjoys this national treatment, that we will encounter fewer complications. Secondly, is about the faster access to the mainland market, in a sense that there are more relaxed requirements for customs, for importation and sales return procedure, etc., etc. That makes the delivery of goods into mainland and also out of mainland much faster. Last but not the least is the more simplified or close to zero import tax. So there's a zero custom duty, there's a zero consumption tax, which is compared with the normal foreign companies to access the mainland markets. So all of these are where Hong Kong company position well in access the mainland market, as well as continue to enjoy this free capital flow, which foreign company will enjoy. The second important industry is the professional services. So if I can give an example, in early 2022, Shanghai district have put together a list of qualified professional talents to practice in Shenzhen and GBA area. And also in late 2021, Hong Kong and Macau residents with professional qualification in 11 areas can practice in Shenzhen area as well, including finance, taxation, accounting, legal, and etc., etc. The list goes on. So all of these examples points to the fact that mainland is welcome professionals, especially have the experience of overseas, to go in mainland to practice, to enhance the capability of the mainland professional service markets. So from back to Albert, your question is from family office point of view, from policy making point of view, that I think that family office should also look into the industries that have the policy blessing and leveraging the Hong Kong companies' advantages in these industries, so that they can have a more cost-benefit return and results when it comes to investing in the mainland markets.
Okay, well, thank you for Christine. I do think you really answered the questions and provide us a lot of good information. Well, a very extensive coverage over the whole ecosystem, not just only for family office, not only just for organization or institution. You also talk about individual talents too, well, different kind of professionals. It's truly what we are expecting from a whole ecosystem perspective. And thank you for raising a lot of good points. And I see that there's a lot of great good initiatives where the mainland China as well as the Hong Kong governments try to build up a healthy ecosystem to welcome the investors to go in, not just family office investors. I think, well, some of the factors here really align with my third questions, right? And it's more related to policy makers. And market surveys show that more than 450,000 high net worth families with more than 6 million RMB in investable assets across Guangdong, Hong Kong, and Macau. And the aggregate estimate investable assets are at least RMB 2.7 trillion, which is really a big number. So making the GBA the world's wealthiest regions. All right, well, besides these financial factors or DNA, how the policymakers in the GBA can facilitate family office to increase its role, how to facilitate family office to increase its role in managing wealth transfer, as well as bringing additional values to the GBA. I think you do cover some of the key points in the second questions, all right? But I think, Christine, please help us to learn a bit more and help to expand or elaborate further about what policymakers in the GBA areas has been doing so, bringing values to the GBA as a whole.
Sure. Well, if we can take a step back and look at what the current policies are pointing to and how we can make use of these policies. I mentioned a few points in the question, the previous questions, but I think in general, if we look at a bigger picture, mainland in general, if we look at the GBA role in mainland, it feels a bit like a precursor of opening up the mainland markets. And the question is how we can, as family office practitioners and investors, how we can ride this blessing and take advantage of this blessing to facilitate the business transformation as the wealth succession that we discussed in this talk under this topic. So the current policy itself, if we look at that, it encouraged the investment in the new technology. We feel that this precursor also is also try to help the Chinese economy to transform or transfer from the old traditional economy to the new economy. We used to be, since 1980s, we used to be count on manufacturing. We used to ride on the property boom. All these are considered a traditional industry. So are the patriarchs of the family office, particularly in mainland. And it's a coincidence that mainland is trying to transform from the traditional industry and economy to the new one, as well as the family office in mainland are going through this cycle as well. So how we can take advantage of this to participate in the government incentive and subsidies to encourage the invest in the R&D, particularly in the new industry. That's the key that I think family office patriarchs and the new generation should really have a think about it and have a good reading about the policies and how to take advantage of that. And secondly is that it's based on an observation that the local government in mainland, they are opening arms to investors, including family office in mainland as well as overseas, collaborate with them. They provide with investors abundance of subsidies to attract the talent, to attract the investors to invest locally. So, I mean, this is the second part of the value chain is once we identify the investment, the industry, how we can collaborate with the venture capital arm of local government, how we can collaborate with the state-owned companies, the venture capital arm, to really leverage the network to invest in the mainland. I think this is the second phase of the capturing the opportunities that has the policy blessing. And lastly, but not the least, of course, that as the mass market, the major affluent or the retail investors, how they can ride the policy in terms of invest overseas. For example, we mentioned before the Bond Connect, the Wealth Management Connect, the Insurance Connect, how we can participate, family office, in these larger scale of liberation of the mass affluence and the retail market to the overseas market. I think is another trend that family office should pay attention to as well. These are the three areas that just food for thoughts for family office and also investors when it comes to the current policy. And Albert, you raised questions that where policymakers should encourage the family office to participate in this wealth transfer. I think it's already started, but not as a major trend, which is how to encourage the family office to participate in a more in sustainability, in philanthropy, in impact. We have this under this big theme of common prosperity. I think this is somewhere that family office can also put thoughts into, and policymaker can come out with more supporting subsidies and policy to encourage family office to, for example, tax incentive and etc., to incentivize them to do more, to create social impact, to contribute to the common prosperity, etc., that can help propel the mainland and GBA to go forward in this wealth transfer trend.
Yeah, so thank you for Christine for further elaborating on what policymakers has been doing at GBA, trying to facilitate family office to increase its role in managing the wealth transfer. As a fellow in the financial service industry, I really observe what's been happening during this couple of years, and I do think, well, both the mainland governments as well as the Hong Kong government, well, you guys are doing great things, and there's a lot of good, well, policy being imposed, trying to help to foster the GBA. Well, of course, that's covering Hong Kong as a beneficiary areas too. Okay, well, Parkman, well, you and me came from the financial service industry, okay, from the commercial world. So what is your viewpoints from your perspective? Do you have the same observations as like what I have? And do you see policymakers in the GBA helping as well facilitate family office to increasing its role in managing the wealth transfer and more importantly, bringing values to the GBA areas? What's your view? You mind to share some of your viewpoints with me, as well as with the rest of the participants?
Yeah, happy to. I'll just add on a couple of points. One, I think tax is very important element for high net worth. Families consider setting up an entity here and managing their wealth and or making an investment. So because given we are managing the assets that take a very long time horizon that lasts for many generations, so we want to make sure that the capital can transfer generation to another generation without what we call leakage. So tax would be a very important element. And policymaker in the GBA, they should take into consideration on this if they want to promote the family office businesses. And maybe you can take an example for Singapore. They recently, not recently, but a couple of years, they already established the family office, rules and have a significant tax incentive for that. So, over the past years, when we talk to a lot of industry people and banks, you are seeing they are a lot of new bank account opening on the public bank in Singapore, just focusing on this kind of tax incentive. So I think this is an important point that we all know. Another point that would be on the capital flow. Although everyone knows that we have the foreign exchange control, but there are gradually more channels opening up, such as the QFII and QDII. But of course, there are still many restrictions on that. And most of the channels, they are quite focused on public investment. So mutual fund, stock and bond, etc. But not a lot focused on private investment, like private equity, venture capital, real estate sector. So I think hopefully and gradually in the future, we have more this kind of channel that can facilitate the private investment. As all the major allocators and assets, investor, they gradually increase the private assets rather than the public investment.
Well, Parkman, I think you find a great time to advocate what the industry is expecting or looking for when Christine, representing West Hong Kong from a government side sitting over here, you raise good point, tax, capital outflow due to the foreign exchange, such and such. Okay, but honestly speaking, the moderator, I have to be very neutral and say that I can see that there's a lot of new initiatives where the government is working on, and even sometimes they have the white papers coming out. So, well, every one of us are trying to advocate and share our views with the government, and I do think the government is very open, trying to take our viewpoint to see how they can work on our areas based on our comments. Right. Well, I think we almost come to the end, but before we come to the end or go to the Q&A, I want to, with the panel speakers here, like Christine, as well as Parkman, where at the very beginning I'm thinking, you may want to use one sentence to conclude your views for this discussion topic, all right? Since we still have plenty of time, okay, you can, well, use more than one sentence or two sentences or even more to conclude your views for these discussion topics. So, Christine, would you mind to share some of your views to recap our discussions today?
Sure. If I can borrow two terms that have been commonly used in private banking, which is asset allocation as well as a top-down approach, I think that in this context of wealth transfer, I think asset allocation is important when it comes, especially for mainland Chinese families. They are increasingly open to the going out of Greater China. And GBA is a good way to go out, and through GBA, how to look into further diversify their assets, allocate their asset I think is one thing that they can look into by leveraging GBA. The second thing is about the top-down approach. It's from investment point of view that we always, and again, in borrowing the mainland Chinese saying is that choose the right lane, investment lane is important. Choose the right lane to invest is important. So this is in the context of that, choose the industries that has the policy blessing that we've been discussed, where we can, what the policy is about and how we can leverage these favorable policies to invest in the mainland market in GBA. I think this is another, there's another food for thought of family office when it comes to investment.
All right, thank you, Christine. Hey, Parkman, well, what about you? Okay, share more of your view, okay? One sentence, two sentences, three sentences, okay, to conclude your views.
Yeah, I think Hong Kong family office are well positioned to capture the wealth creation in the Greater Bay Area. And this, as mentioned, the flywheel effect, the one generation successful, entrepreneur company can bring up another wave of new company. And so we are well positioned to capture the wealth creation and also deploy the capital within the region as well as globally. And there are many interesting opportunities within the GBA, and as well in Hong Kong, we have a lot of information flow that we can deploy capital easily in both the Chinese world and also the Western world.
Thank you, Parkman. Christine and Parkman, I think we still have some time for the Q&A. All right. May I ask from the floor, is there any questions from the floor that you would like to raise and ask our prestigious panel speakers over here? If no, I've prepared questions to you two panel speakers, right? Since Christine I think in the previous questions, you did mention about old economy and new economy. I think this is always a good topics, not only for family office, but across different industry during these several years, because during these several years, we come across the pandemic risk as well as the geopolitical risk. All right. So how do you see these two risks that that come across in these 2 years? Do you find any particular or significant implications on the activities to family office? Do you find that that may reduce their intentions or their investment in GBA areas? Please share some of the views to us.
Well, I think the one of the key advantages that family office have over investment manager, for example, fund manager, is that family offices have a longer investment horizon.
Right.
If we believe in the new technology, we believe in that our society will do the right thing. We will come together to do the right thing to address the social problem, the environment problem. Then as long as we choose the right trend to invest into, at the end, the result will be favorable. So I think that when it comes to investment, the risk has always been linked to the time horizon. The shorter time horizon, the harder to control the risk. The longer the horizon, to some extent, you smooth out the risk. So admittedly, there are many risks currently, the political risk, the tension between mainland and the US and Western worlds. However, it will believe in that our society will come together, we will sort out our differences. I think that with this long-term view, we are still in the right direction. And when it comes to that, Albert, you mentioned the point of the new economy versus the old economy. Again, I think it's about that we do the right thing. This is about doing good and doing well. So this is increasingly in the context of when we talk about investing in sustainability, investing in ESG. It's about how we can do well financially and also do good to the society. In this sense, that how we can balance this financial return as well as the positive impact to the world, I think is something that the new economy or the new technology is trying to achieve. And that hence both the older generation and new generation are keen to get on the new economy because it signifies a new mandate of all of us.
Yeah, I think, Christine, you give the lovely answers, and all these are actually music in my ears. Because talking about investment, we're always looking for long-term investment. I do think, well, going along the time horizons, many things, no matter what kind of risk, they will be eventually adjusted or mitigated. The investment cycles during the past centuries did tell us that with a long-term investment, you'll be correct anyway. And thank you for mentioning about ESG. I'm ESG fans, and because from time to time when people talking about ESG, they're very focused on E elements. Now we talk about S, the cultural things, and I do think family office play a very critical role on the S elements because they talk about society. Talking about generation transfer of the wealth, not only on wealth, but also on the culture as well as the traditions, which is very important elements to the S things in the ESG. All right, thank you very much, Christine. Parkman, you mind to share your viewpoints regarding, you find any implications to the commercial sectors like the financial institutions, where the family office continue to play a critical role, after the post-pandemic or due to the implication of geographical risk? What do you think? Okay, during the past several years, you find that there's any implications to family office?
Yeah, speaking about the ESG, I think this is a very broad topic, and we welcome the ideas about a scientific and quantitative approach to measure specific impacts and results. So that there are many tools in the industry that are beginning to track that in a systematic way, and I guess there are many subcomponents that can measure in a quantitative manner, whether it's related to air pollution, carbon emission, etc. But for investment industry, I think ESG is definitely a topic that can't be ignored. On the good side, we see a lot of media coverage, public interest, building momentum and drive major assets allocators like family office to incorporate that into their investment mandate and so that push the underlying manager, also portfolio company have to adapt to that ESG standard. But on the flip side, I hope this is not another exercise just for them for fundraising and also gathering more assets. So we usually dislike the idea about trend following and tracing what is hot in the market. So for us, as family office investor, or for us as a investor particular, we are still evaluating various strategy, and would like to see more track record and data point in terms of the impact those investment product or those company can actually deliver. So before we deploy the capital, we want to see more result rather than just follow the trend and follow what is hot in the market. Yeah, that's my personal view.
Thank you. We have 4 minutes, so I would like to ask one more question. So, one question from the grounds. Well, I also would like to comment. You come from financial institutions, okay, and well, for City Capital, we have a strong focus in ESG investing as well as the fintech and other sustainable investing too. So, to you, if you put yourself in the shoes of family office, what kind of niche sectors or you find from family office have been increasing their investment in the GBA? I think in the early beginnings, you did mention about technology. So besides technology, or what kind of technology that family office, well, in these recent years are increasing their investments? So would you mind to share some of your insights?
Yes, definitely. I think other than technology, of course, technology is already a very broad space that basically nowadays everything can relate to technology. But then on the other specific, maybe on biotech. So I think compared to US, China is still just the beginning for biotech innovation or pharmaceutical, that kind of industry. It's just the very beginning. So for us, say for example, recently we invested into a true AI-driven drugs discovery company. So what they do basically is for early stage, even preclinical drugs, they use AI algorithm to help to discover that kind of molecules or target that can eventually become a good drug. So I think biotech is an area a lot of people have been putting their money and then putting a lot of emphasis in. And as mentioned, Hong Kong has a very good university, Chinese University, University of Hong Kong. They're both very strong in medicine and also biotechnology. And I see a lot of professor and also the research team have been actively approaching venture capitalists, trying to form a new company or to explore the entrepreneurship to take into the development of this industry. So I guess biotech is another area.
Thank you. Thank you, Christine. Okay. I think Invest Hong Kong really helped a lot of overseas investors come to invest in Hong Kong, and now extending the role, try to support the GBA too. So from your perspective, you find any like family office from overseas increasing their investments in certain niche or sectors in GBA? You might share some of the viewpoint.
Sure. To anchor Pullman's point that biotech is definitely something that we've seen, that increase demand investment. And also that because Hong Kong Stock Exchange introduced that listing biotech company pre-revenue and pre-profit. So we actually have 50% of such company listed in the world that taking place in the Hong Kong Stock Exchange. So taking of the Hong Kong IPO market, the stock exchange is another good thing to help the investors to invest in biotech. Besides biotech, we also observe that the increasing investment into the hard tech. For example, the semiconductor. For example, some med tech as well. So this is a change from the investment into the e-commerce, TMT sector into top tech, biotech, med tech, et cetera. So this is what we've observed in terms of the change of investment appetites of family offices in mainland.
Yeah, thank you, Christine. Thank you for mentioning the IPO as well as how Hong Kong being a platform for fundraisings, helping family office to do exits or to attract family office from overseas. Now the time is 5:46, so we have a little bit overrun, but a lot of good information are flowing over here. Thank you very much to all the speakers today and also all the participants. Well, I hand over the time to Asim as well as the team from VFF. So thank you very much for attending this panel. Really appreciate it, and have a good day.
Thank you. Have a good rest
Thank
of the
you.
day.
Good evening, everyone. Welcome to GBA WealthConnect Forum 2022 Private Wealth and Sustainability panel. I'm super excited to introduce all the speakers and moderators over this session. And we are looking forward to the valuable contributions you have for us today. And let me introduce you to our moderator, Victoria Shapovalova, Senior Consultant at Deloitte. Victoria, now I hand over the session to you. Thank you.
Hi, everyone. Good afternoon and good morning, good evening, in case you're joining us from other time zones. My great pleasure to be moderating this panel and learning together with everyone from our expert speakers. And let me ask them to introduce themselves in no particular order. Really looking forward to this session. Let us begin with perhaps Dr. Eva Law. Just a reminder to unmute yourself. Thank you. Still happens to us,
can you
to me
can
every
you hear
time.
me?
Yeah.
Yeah, sorry about that. Okay, let me introduce myself. Sorry, everybody. I'm Eva, the founder of Association of Family Office in Asia. We serve the family office and private investor in Asia, playing particular focus, helping them to formulate their competitive advantages through sustainability strategies.
Thank you so much. Great to have you today, Eva. And let's move on to Marianne, who's joining us today from the States, all the way from the other side of the world.
Thank you very much, Victoria. Yes, currently I'm in the East Coast state, so time is a little bit awkward. But I am Marianne Tseng, and I have been an Asian Wall Street financial veteran and was a managing director, head of ECM and syndicate in the equity capital markets division, leading team across borders, offering financial solutions to issuers and investors. Everything I share today will be independent and wholly my own personal opinions and views. In addition to being a financial market expert in the financial market expertise, I have been focusing tremendous value on community service and engagement, particularly with a focus on advocacy of sustainability and ESG.
Thank you so much, Marianne. And our last panelist today is Francesco, who is dialing in from Hong Kong.
Thanks, Victoria. Yeah, I'm Francesco. I'm based in Hong Kong. I have a background in private banking, but I've been in impact investing for the last 6 years now. First in Switzerland with an impact asset manager, where I mainly focused on public-private partnerships, working with development finance institutions mainly. And then here in Hong Kong with the Sustainable Finance Initiative, which is a network of family offices across Asia who are committed to deploying capital towards sustainable investing. In a nutshell, we help our members understand various impact thematics and products. We offer sustainable finance education to both individuals and corporates. And we also do consulting work in the impact space. Looking forward to the discussion.
Thank you so much. Yes, and with this, let's jump right into discussing how sustainability these days is featuring in private wealth. Is it changing? Is it not? What's going on? And let me start by saying that in my field, in the corporate world, we see this booming demand for ESG, for sustainability, for climate-related services, knowledge from the clients. Is it the same for your organization or members? Are you observing the same trend in the last perhaps 3 years? What changes are you seeing? And I'd like to ask this all participants to kind of open the floor. Let's open with Eva, and then please feel free to jump in at any point. Let's keep it interactive. Thank you.
Yeah, sure. I think everyone sees ESG is really receiving attention, and there are so many development and momentum in the market. And the message from COP26 ring loud and very clear for many corporations that paying attention to environmental, social, and governance issue is becoming increasingly critical for all companies across all industry. And now people and corporations are treating ESG much more seriously. Sustainability and SDG are no longer slogan shouting in AGM or press conference. People want leaders to drive real change and really bring positive impact. And over 80% of the family principal, the C-suite executive, and the investment professional in our A-level circle believe that ESG program will generate more shareholder value in 5 years' time than they do today. And I believe in big data. Many figures tell me that company with higher rating on ESG is actually
receiving a lot of advantages. They enjoy the average operation margin 3.7 times higher than those lower ESG performer. An investor in these companies also receive higher annual total return, outplacing the poor ESG performer by 2.6 times. So it's a very sexy figure, right? And simply put, sustainability is really a business approach to create long-term value by taking into consideration how a given organization operate in the ecological, social, and economic environment. And sustainability is built on the assumption that developing such strategies foster the company longevity. As the expectation on the corporate social responsibility increase and also the transparency become more prevalent, companies are recognizing the need to act on sustainability, and professional communications and intention are no longer enough. I see a tremendous expectation from the public society where the people demand the leaders to really take real action. That's just I think the big change, okay, and what I have seen in the market.
Thank you. These are some very, very attractive numbers. And I love that there is a demand for transparency.
I think I'm going to quickly jump in just from a regulatory government guidance perspective in the last few years. I think that we've seen since 2019 with the global efforts by PBOC, Bank of England, and also leading central banks, detailed reports on a call for action on climate changes as a source of financial risks. It was the first comprehensive report on behalf of Network for Green the Financial System. It has been a significant efforts from the regulators, central governments to financial institutions, all have been taken to a very different level that we as a communities must embrace and embed in our process as a market participants. And also further into 2019, we also saw the China's progress report on implementation of the 2030 agenda for sustainable developments. The report itself features of cases depicting efforts by Chinese government at all levels, showing how the private sector and general public are contributing. We are seeing that China is pushing its sustainable development forward in the 3 key areas: eradicating extreme poverty, building an ecological civilization, and also contributing to global climate and sustainability in governance. So we see that one of the highest profile commitment that the Chinese government has made is to reach peak carbon in 2030 and achieve carbon neutrality by 2050. While recent energy challenges have resulted in temporary increasing reliance on oil and coal again, I believe this is a widely just a short-term necessity that it will not impact the bigger picture goals. I could go on and on with more support of government regulators focus on this. With the updated IPSF Common Ground Taxonomy on Climate Change Migration published just earlier this year in 2022, together with China and European Union, further remind visible, renewable, and sustainable measures in industries, including energy, manufacturing, construction, transportation, and agricultural, all should have outlined more detailed financing availability and help with the categorization, refinement of green finance relating to financial activities internationally. So we have all seen a very high surging demands from investors, buy side in particular, including.
It seems we might have lost Marianne for a second there. Let me ask Francesco while Marianne is dialing back in. Yeah, what trends are you seeing?
Sure, I can just complement maybe what Dr. Eva Law and Marianne were saying from an investor perspective. I think what we see with regards to our members, they really benefit from the ecosystem and network that we offer at the Sustainable Finance Initiative, and they've been learning from each other and from us as well. So I think the way they look at sustainability tends to evolve over time. Just to give you a couple of examples, I think over the past 3 years or so, we saw our members allocating a bigger portion of their investment portfolio to sustainability topics. Their approach to investing has gone from, let's say, more opportunistic before to more strategic now. So focusing on specific themes, using portfolio carve-outs, for example, or working with banks on discretionary mandates. Some of our members are actually embedding sustainability at the core of their businesses. So for example, we have some members in product manufacturing, and they started to embrace circularity, business models of production, reducing waste, etc. And then what was interesting to see during the COVID times, actually, it was that the pandemic actually strengthened our members' conviction in sustainability. It's a good strategy for them. I think the challenge to find is really to find the right asset class to invest into, depending on the situation. For example, with what is going now what's happening now in the markets, there is a need for more liquidity, shorter lockup periods, etc. So the challenge is a bit to find the right asset class. And then I think something that we saw from our members is actually the understanding of how they can be more additional by supporting, for example, first-time fund managers or companies that have difficulties to access financing or need flexible financing, for example, like concessionary returns or longer tenors, etc. And then maybe the last point, it's more at an organizational level for Sustainable Finance Initiative. I think the variety of sustainability topics that we see in Asia has broadened over the past 3 years because of topics that are more popular in the US and Europe that have spilled over to this side of the world as well. So we started to look into thematics that are less mainstream, such as gender lens investing, sustainable textiles, and like nature-based solutions, for example.
Thank you, Francesco. This is incredible. And building on this, as the field of sustainability is basically huge, right? There's so many topics and subtopics and industry sector specific, things to keep abreast with. And with the growing interest for this topic, right? There are lots of people. I'm sure you're getting huge amount of requests from someone who wants to start but has no idea how to approach this subject. What would be your recommendations? How would you recommend someone to jump in? Let's perhaps start with Francesco and then open the floor.
Sure. I'll try to be brief, but just feel free to cut me off. I think what we usually do is to advise or recommend private wealth owners and family offices to identify the values that drive them, and then move towards aligning their portfolio to these values. There is a variety of approaches, across the sustainable finance spectrum that are available to investors. We believe that it's important to make an initial distinction that is between ESG and impact, ESG being more of a risk management tool and impact focusing more on generating hopefully positive outcomes by investing in companies that are driving change. So through our work, we identified 4 main approaches to get started in impact, which are not mutually exclusive, by the way. The first one being no harm, which means basically negative screening, removing holdings that are not aligned with your values. And this tends to be more of an ESG approach. Then there is the option to start small with some selected investments to basically dip your toes into the field and get acquainted with sustainability. And then the natural next steps from dipping your toes is basically to create a carve out from your investment portfolio and dedicate that to impact 100%. So this is usually used to empower the next generation of a family, for example. And it's useful to start creating a track record in sustainability if that's what the family wants to do. And then I believe the last one is what we call all in, which boils down to systematically incorporate ESG and impact throughout the investment pool. This requires deep conviction in sustainability, and it's a bit more of a structured approach for families to gradually transition towards 100% sustainability. Last thing I would like to say is that sometimes it can be a bit overwhelming to move your first steps in the space. So organizations like Sustainable Finance Initiative, for example, can help provide the necessary network and knowledge. For example, we have launched an education platform recently, New Impact Society, which helps to get started in this field.
Thank you, Francesca. Would anybody else like to add to that?
Maybe let me share about my observation how the old and younger generation of the high net worth investor approaching sustainability. I would say the phase of today's environmental and social curse is apparently wrinkle-free, because young people have the most significant stake in the sustainable future. I'm not surprised they are more active than their parents in leading the change and driving sustainability on global and corporate agenda, as well as in their daily life. And most of the young leaders in the family business are willing to or have already made very strong commitments to sustainability, in large part through upholding transparency and addressing material issues. Though 90% of these family principles in our circle find sustainability as important and imperative, but less than 50% of these principles have contemplated how to make sustainability be its strategic advantages, and merely 20% of them systematically incorporate sustainability into their business model or business strategies. From being reactive to proactive, I believe the young leaders embarking on a more sustainable journey in recent years, while the old generation generally buy into ESG, but without very clear ideas to deploy sustainability strategies and action plans. So both generation and their family corporation really needs technical or maybe a consulting support.
Thank you, Dr. Eva. Marian, would you like to add anything here to perhaps, on two topics now? How do you see, what difference do you see between how different generations approach sustainability, right? And also, where do you start? Where do you begin?
I think in terms of sustainability, I think I would like to highlight why would this be an important part of the investment plan for either family offices, individuals, household, or even within investment firms. Recently, if we look at from demand side or customer investor side, what I've witnessed is in the last few years is that many family offices currently, especially ones from US and Europe, and now spilling over to Asia as well, they are planning the wealth of their growth of their wealth in a much longer terms, including the next few generations. When particularly family offices deploy their capital, they are always asking the questions, how would this benefit my next few generations? And this ties very well with sustainability, including that of ESG. They now have mandates focusing on companies those can show a much more visible and identifiable growth commitment, or marking leading for the next few decades to come, but also sustainable in a way of how the company structure itself, either board composition, how the company treat their workers, how is the company operation and manufacturing be sustainable, not producing any more greenhouse emission into the atmosphere, etc. Those are all questions that we've experienced as market participants that investors, including family offices, have been asking, as well as the global leading loan-only funds. So as Eva mentioned earlier, with family offices, those have excelled in their core business and now looking for next few generations. They are very highly focused on giving back and doing good with their wealth, and also have been keenly focused on deploying the capital in a way they believe are making our world a much better place. Having said that, I think a few more, going back to Francesco's point earlier on, we are also seeing a few more available financial products in the marketplace coming from Asia, including Hong Kong, namely New World Development Property. They have recently issued a US dollar denominated social and green dual tranche offering in the public bond market. And also their competitor, Xinhoujing Shanghougai Property, signed 21 billion Hong Kong dollars worth of sustainably linked loan. And I think with this, in a way, more competitive landscape within the marketplace, within the vertical, to be more involved in sustainability as well as ESG related financing options should spur more demand side, more supply side versus demand side of the equation.
Thank you, Marianne. Well, let me ask, and sort of continuing on this subject. So, how do you see private wealth managers in GBA specifically looking at integrating some of the ESG principles, or perhaps even looking into sustainable projects to drive impact in the portfolios? And what is the area of focus there?
I think right now, a lot of the investment firms have already deploying much more mindful and started from internal education on sustainability to be part of the investment plan. But on the other side of the equation, we're also seeing that companies and management of the boards also need to be well educated to understand how their decisions could impact shareholder values, returns on equity, and also consequently the return on their share prices on the public listed companies. Growing a portion of the investment world will no longer give capital to companies that do not meet ESG standards, and I believe that this trend is established enough that we would expect it to accelerate. But going back, I would like to highlight one point while we've all discussed earlier. Having highlighted everything that we've shared, I think it's extremely mindful for the investment portfolio companies, for the listed companies, private companies, as well as investment communities, that it is very important also for our audience to understand of avoidance of greenwashing. We all need to be highly transparent, be diligent, communicate with our strategies and future steps to be taken, constantly educate our stakeholders, both internally and externally. I believe that this can be applied on both investment firms, investment banks, as well as corporates. Firms that attempt to get away with the ESG compliance without actually making real changes or truly caring about what they are doing with their business will be caught and punished. And this will be painfully backfired in the medium to long term. And so really understand what what are we looking for within a regulatory framework in determining ESG and sustainable mandate is crucial, important, as well as transparently communicate to our stakeholders.
Thank you, Marianne. Francesca, would you like to add to this? Let me just.
Sure. Yeah. Maybe on the question on like how are private wealth managers in GBA? I guess like we look more at Hong Kong. I would say looking at integrating ESG into their portfolios. I think what we notice is that like mostly adopt like simple negative screening as a main strategy. So meaning they screen out companies that score poorly, right, on ESG aspects. And what we noticed as well from investors is that from investors here in the region is that I think they increasingly, as Marianne pointed out, increasingly expect managers, to target positive and measurable ESG outcomes along with positive financial returns. And I think this is also supported by regulatory requirements, as mentioned before. So, we saw fund managers from a certain size up, now I don't remember exactly the number, will soon be required to take climate risk into consideration, right, and make appropriate disclosures in Hong Kong. Hong Kong-based organizations that will have to comply with TCFD by 2025. And, for example, China that has just published ESG disclosures, which are voluntary for now, but, I think this gives a clear idea where we're headed in terms of how wealth managers are going to behave in the region.
Thank you. Dr. Eva, what's your opinion about that? Yeah.
Okay. I think in the private wealth industry, it's a very standard practice for the private wealth managers to align the client's expectation and their very specific requirement in structuring the wealth solution, and how they integrate the ESG principle is very varied and very personalized. But in general, I would say the advisor would strive to combine the good financial performance with environmental and social objective, while at the same time observing the principle of good corporate governance and in selecting the investment target, managing the portfolio, and the appropriate exit as well. It is the same phenomenon in both the primary and the secondary market. And we also observe that there are certain things that receive attention and capital chasing these investments over the past year. Obviously, climate change is the leading one. And I believe it will remain very central to investor strategies over the coming years as well. This is indeed a very broad agenda that covered many aspects like green energy, energy efficiency, waste management, biodiversity, carbon emission, hydrogen, clean water, green bond, and so on. And other themes that currently receiving attention the advanced technology that brings disruption and a better world. Also, the COVID and the high inflation also drawing capital to agriculture, to food and health-related business. That's the recent observation and trend.
Thank you. I think it's touching on a very important point of innovation and technology. Let me ask here, do you see the technology changing the playing field? And what are perhaps some of the associated trends that you're observing?
Okay, I would say, I believe robot will be our investment manager sooner and faster. Everyone is now using the apps and software in gathering and analyzing data, and also using these tools to construct and manage our self-directed investment. So we don't need investment manager in the future. And I believe it's a trend and also an end outcome to also lower the fees. And that's what, open opportunity to those underprivileged investor, making investment open, not just, the good opportunity rests in the hands of the ultra wealthy, but also to, the general public.
That's very interesting. It sounds like some jobs are at risk.
They need to find some ways equip the knowledge. Maybe they need to be the program manager instead of the investment manager.
Yes, or an ESG specialist.
Yes. Yeah.
Mary and Francesca, would you like to add to that? Is there anything you are seeing in terms of innovation and technology, how it's disrupting the playing field?
I think when you raise that question about technology in terms of a concept of framework of sustainability or ESG, because a lot of investors, or especially leading institutional investors, have been very diligent in terms of requiring their investors' portfolio companies to be able to transparently communicate and also report back of how they are doing in the concept or framework of sustainability methodologies. One technology I felt have been very powerful would be the blockchain technology. It helps the investors' portfolio companies to be able to track its entire supply chain management from upstream to downstream, and able to help with the life assessment cycle in terms of how the companies are producing, manufacturing, also recycling of its material. It helps with investors to also understand the companies that we invest in throughout its entire value chain, has it been diligent and carefully also source its upstream supplies, and as well as going to the downstream consumers. Are the products being recyclable, etc. And I think this is going back to Victoria's point, where the technology innovation should have been impactful in terms of helping us to identify and discover a much more greener portfolio companies.
Thank you, Marianne, for bringing up blockchain. I feel like now the session is complete. We just need to make sure to touch on NFTs and Web 3.0. Yes.
Yeah. Yeah. Maybe to complement what Marianne said on blockchain, actually, we've been seeing applications of blockchain to increase traceability of produce, like for example, from plantations to basically the dining table. So that facilitates the certification of certain produce according to international standards. We have seen carbon credits using blockchain, which is very interesting, because then you can really increase the transparency of like your projects connected to certain carbon credits. So those are very interesting applications, I think. We have also seen NFTs actually that you mentioned, Victoria, but I still need to understand how that actually works with carbon credits, but we're on it, I think. And maybe to add to the technology bit that we were discussing before, I think we saw a lot of movement in the built environment space. I think people, above all in Hong Kong, which is such a huge real estate market, I think people realize that it constitutes about 40% of CO2 emissions globally. So we got to do something about it. And we've seen a lot of companies and funds actually focusing on this particular tech, introducing innovative technologies to decarbonize buildings and retrofit buildings to reduce carbon emissions. And yeah, maybe to tie back also to what Dr. Eva Law said before about the different generations. I think we saw maybe older generations of families looking at more traditional topics, very important topics though, like health or education and poverty, etc. While the next gen, we noticed that they tend to focus a bit more on globally relevant topics that are really urgent, like climate and food and agriculture, water, etc. So all these fields require a lot of technology to deliver very substantial changes.
Thank you. Very interesting discussion. So here, I hear regulations are being brought up a lot. And Francesco is referring to impact and really creating shared value for all stakeholders. But I'm just wondering, what are the main drivers you are seeing, maybe Eva and Marianne? Is it still regulations? Is it still regulatory compliance? Seeing as in Hong Kong, right, our regulators are coming up with new requirements on climate and sustainability. Or is it perhaps this, understanding of the urgency for action? Or is it ESG, so traditional risk management?
Well, we've seen quite a few studies being done by this, and this is why I highlighted the regulatory framework and international government bodies collaborating together in pushing a sustainability framework, because all studies have shown that the most effective that it's from a regulatory, also government regulations framework refinement that have pushing the efforts that allow both companies, management, or institutional financials to be following this COP26 guidance much more closely. Why I said that, because even back from Kyoto or earlier pact, that just by having passion or advocacy in terms of the subject title have not been too powerful or impactful. It was when the regulators, government policy really put the foot down and said, this is what we are, this is the guidance that we're looking for, and this is the the marks that we need all companies to be able to match in the next few years. Then we saw companies really put their foot up and drive forward of all internal and external sustainability and ESG related changes. And this also follows through spillover through all a variety of verticals. So in a way, and I think that from a top-down government, international collaborations, focusing on what kind of targets and KPIs we are looking at, then the verticals industry can really follow through with a much more clear guidelines to follow. Having said that, I do believe that with a lot of investors understanding, especially during and post-COVID, that why having a greener earth is hugely important, and then why each of our either individuals or households contribution or our actions will have a huge impact collectively. And hence, I'm hoping that more of people talking about sustainability and ESG, and as well as what Francesco and Eva mentioned earlier, that the next younger generation, the future generations understand how our impacts, how our actions would impact our generations to come. That this combined all together, we should see a much more effective changes coming to us.
That's very encouraging. Great to hear. Yeah. Dr. Yeva, would you like to say on this subject as well? Yeah.
Oh, yeah. I think to me, I would say what I'm expecting is not much from the regulation, because the regulator right now are more focusing on imposing duty to the asset manager on making certain disclosure, but it's anyway welcome, because the disclosure are enabling the investor having some information, or at least a more standard approach how they can evaluate or compare key information that relevant to their impact investing or ESG investing. But other than this kind of disclosure requirement or standard, no matter this is for fund or for the listed corporation, I'm more concerned about what should be the intensity, or the effort that needed from a very collective, body from everywhere, how we can work towards sustainability agenda. It's about, for example, how each corporate in their own industry that they can do their own parts for making impact or rejecting any existing practice that causing harm to their society or the environment, right? So it's about how we can change, make the real change and generate real impact. And then also, I think the other way is there are so many different standard available from consulting firm, research house, and also maybe super government agency as well. There are so many these kind of KPI or matrix that enable people to from their own perspective to evaluate impact or evaluate some certain key topic. But the general public or even the investment professional industry, are they really familiarized with all these kind of very complex measurement? There is no universal standard right now in the market that making the appraisal or evaluation very easy. So I think more effort should be put together in addressing this kind of issue. That's my idea.
Yes, thank you. A very good point that at this point, there's a lot of barriers still. What I'm hearing, it's not even the lack of awareness. As a year ago, we were all saying that, there's a need for more education, but at this point is standardization, harmonization. Great point. And we only have about 5 minutes, less than 5 minutes left. And I wouldn't want to finish on this kind of pessimistic note. Let's try to still find some light right at the end of the tunnel. So let me ask our panelists. So the most favorite question of all panels. If you had a crystal ball, right? What are your predictions for the year to come? Perhaps let's keep it kind of realistic timeline. Do you see it going up, down, or what are your predictions for us? Let me call on Francesco again.
I was gonna say ladies first, but okay. I think, I mean, to be honest, like in the next 1 to 2 years, let's say, I think with the urgency of the climate crisis, especially in Asia or the emerging countries that are going to be the most affected, I think we're going to see a lot of capital, private capital, also with the help of blended finance solutions, for example, catalyzing this private capital. We will see a capital flow towards urgent topics like climate, access to water, for example, biodiversity preservation. And I think investors will more and more signal to either their wealth managers or through shareholder engagement and tools such as these, their intention to focus more on sustainability.
This is great. A very optimistic, perfect, perfect prediction. Yeah, Marianne, what do you think?
I think my predictions are that investors, going back to what we both discussed earlier, that investors will continue to ask for more questions in terms of transparency and disclosure, in terms of where they put the capitals and the types of financial investments or the companies investors invest in. I believe that there will be many more questions involved to include diligence and management focus on sustainability and ESG. I do believe that for any financial institutions or companies, those do not appreciate or are lagging behind the industry competitors in terms of sustainable and ESG compliance, they will lose their competitiveness in competing for capitals and investors' interests. And as I highlighted earlier too, I do believe that more regulator compliance, both internally and internationally and domestically, will also drive awareness and adherence in the marketplace. And so that will create a positive loopholes to help communities, including education, understanding, more importantly, in executing and adoption of sustainable practices, including making rational investment decisions.
Thank you. And the final minute goes to Eva. Yeah.
Yeah. Okay, I think no crystal ball, but by logical trend that I believe the climate change mitigation will continue to receive a lot of attention, but at the same time open up some new dimension. Right now, many people are concerning about the CO2 emissions, right? But there are some other super pollutant actually causing harm to our world. So I hope the attention towards other super pollutant will really receiving attention, and we have ways dealing with it. And at the same time, I hope the focus is not just making towards the investment manager, but to the investor, because investors are the party who can cast the impact. They have the influence because they are the capital owner. So the active ownership concept and how we can support the investor to really cast their own impact and making the change, positive change, that would be something that really will require our effort helping them.
Thank you so much. I love the predictions. It sounds like we will see some good progress. With this, let me thank you, the panelists, Francesco, Dr. Eva, and Marianne. Thank you so much for dialing in today, and thank you, the organizers. Thank you, Mushir. Passing on to you.
Thank you so much, Victoria, and thank you to our wonderful speakers, Dr. Eva Law, Francesco, and Marianne. I really appreciate, Marianne, middle of the night for you in New York, but you made it for us, and that's a testament to your professionalism, so thank you so much. And to all of our audience, thank you so for joining us today. We've had over 10,000 live stream viewers from Asia, including in mainland China and the GBA. So very thankful for that. I want to once again thank Dr. Eva Law for supporting this panel through the Association of Family Offices and our main event sponsors, Invest Hong Kong in particular, Dave Wong, Peggy, and Christine for supporting us. And to all of you, stay tuned. Our next event is the Virtual FinTech Fair happening in August, on August 25th. I want to thank all of my team who have done a tremendous job to support all of this. Our videos will be up in the coming days, and we'll share it with you through your emails. So keep an eye open for our emails. And once again, thank you, everybody, and have a nice evening. Thank you.
Thank you.
Thank you.